Good morning. It's May 24th. We had a good evening. We're going to be streaming stocks, options, futures trading today. Sub up, like up, comment down. Happy money sticks around. I'm just getting a little set up here. Figured I'd start the stream. While I go. We'll be watching SPY, GME, BBBYQ, Rival, whatever runner, bank stocks, Pac West, Wall. See what we got. Passing Cloud, 414 puts expired today. Yeah, I would probably close pretty close to the morning. I mean, we're kind of at a support here. But we could come down to fully do this inverted cup. Come down to 410, but I don't know if that's going to happen before. I don't know when that'll happen. And when you have a gap down like this, I don't know. Just play it by ear. I don't know how many you have. You can scale out some and see how it goes. If we break this level by open, I'll see what happens by the time we open. But yeah, if we open down here, we break below it, then you could keep riding it. I'll put in some support and resistance lines, see what's going on. You can always scale out too, a little bit now, a little bit later. Usually a good trade. Good morning, Passing Cloud. Good morning, Tal. Good morning, Keenan. Barbecue for John Bennett. Is it? I guess it's down in the old German market. Oh, back up. This is down 14%, so we'll see though. I put it wide spread. Morning, buzzing. Get that Barbie started. All right. Yeah, we're live, Mohammed. I like to start it as early as I can and just let people funnel in as we get things set up here. So, just going over kind of pre-market analysis, seeing what's going on, checking the news. I'll update you guys on the news here in just a minute. Just getting set up for the day. Good morning. Let's get the barbecue started, man. Who doesn't like barbecue at 9 a.m.? Just giving you guys a chance to get some pre-market likes in there. Got 7 of you liking the stream. Appreciate it. Market did come down a little bit more there. See where we might get a little bounce before open. Only main thing today is FOMC at 2 o'clock. Waller speaking at 12:40, so maybe we'll watch that. Upwards up 2.4%. I said quite the little rally down here. Looks like a good trade, really. It's a bit risky though. I don't know if it's more risky or not than Arrival. Probably less, or probably more rather than Arrival. Arrival's chart I really like though. I think this thing could keep going today. Yeah, I'm gonna keep an eye on this one. Got a nice little like wedge forming all of yesterday, basically without that crazy volatility spike, and the fact that it's holding levels up here after a 35% day. Basically just one day of consolidation. So with all that volume too, we'll see. I think this thing could get kind of crazy. It's such a tiny float, only 8.4 million. So might be day trading this today. Well, barbecue, I think it's gonna open low, so might get a low open and then a rip, or we're gonna just consolidate to the weekend potentially. We're looking at Arrival's options, seeing if they move much. $0.25, yeah, so that's 400%. If they're moving much anymore. What are you on them? I mean, there's kind of a spread. Kind of a big spread. Let's see, maybe just shares still. I'm making a new low there, pre-market. Female squeeze again. I don't think so. Not like we've seen. But I don't know. Not certain on it one way or the other. I think there might be a certain price where it starts to disrupt collateral, and I don't think we've seen that price in like a year. So hard to judge, I guess. But as far as the problem they've been in for 2 years, that caused it to basically pump and dump every few months. Seems like they're out of that issue. Move to Thailand? You don't need BY to squeeze to move to Thailand. It's pretty cheap there. You could probably live like a king already. Nice, coming down more. Yeah, got a basket swap for sure. We actually saw it wake up the other day on the 1 minute with GME right here in AMC. Kind of interesting. AMC had the same pump with volume at the exact same time. So you'll see it every now and then. It used to be pretty consistently, you know, during the cycle period and or over a certain price. You'd basically see that for a whole day. Turn on and off. You want to get a ding? Gets you hyped. Should have held my my short contract. I would have been pretty well off at this point. Tried to get back in them here, but no such luck. I think I have the buying power back though. So I should be able to trade some today. AMC. Wide spreads in the pre-market and in the German market. This barbecue's down 11.5% now. Barbecue, AMC, Mullen. Morning, Dennis. Top order strong. Pre-market up 4.5. Arrival holding up a nice level. This thing got crazy over that $4 resistance. I wasn't watching when that happened, but kind of glad I wasn't. That might have made me go crazy. Buy still coming down here. So looking for 410. 410.26 around there for potential support. Kind of still in this aggressive downward trajectory since yesterday. Neo sold off, down 5%. Oh, XPeng had their earnings. So favorable. PacWest is up 1.5. It was up more earlier. I think they sold. Yeah, sale of real estate lending unit. Sale of property lending arm. Like they're making the right steps. Okay, got about 10 minutes to open. Good morning, Aware. Morning, Ace. Morning, Experienced. So SPY keeps making new lows coming into open. Down 0.45%. Looking for a bounce at 410, but doesn't mean we'll just go straight down there. FOMC is at 2. Interesting. My E-Trade normally gives me a pre-market on barbecue, but it's showing it's up 3.69%. And the German market's still showing down 12. Oh, because it ripped maybe in the German market? Maybe that's why. That's confusing. Yeah, because see, E-Trade's showing me, and it usually has extended hours. Maybe it's not down 10% or whatever. Citigroup to resume share buybacks this quarter. Wow. Seems a bit premature. Former Silicon Valley Bank CEO Greg Becker is refusing to commit to giving up any of the $10 million annual pay he made before the bank collapse. He's getting a little bounce into open there. Same with SPY. Participation of women aged 25 to 54 in the labor force has hit record high of 77.5% in April, according to government data going back to the 40s. U.S. credit card debt stands at a record of nearly $1 trillion. PIMCO says it expects U.S. debt ceiling negotiations will result in a deal before June 11th or June 1st, but possibly not until the 11th hour. What? The Pentagon can't account for hundreds of thousands of spare parts worth millions of dollars that are stored worldwide for the U.S. and allies that use its costliest weapons, the F-35 jet, according to congressional auditors. No big deal. Just let those go. I love government-run organizations. They're my favorite. Kanye West sued Gap for $2 million over failed Yeezy collaboration. Or sued by Gap, rather. Gap sued Kanye West. I think everyone should be prepared for rates going higher from here, up to 6%. Or 7%, Jamie Dimon said. JP Morgan guy. Chinese citizens are suing Florida over the ban that will go into effect July 1st, not allowing them to buy homes in Florida. I don't get level 2. It has always been pretty accurate on, I mean, the pre-market's been right on E-Trade. And TD Ameritrade. The TD is not. Yeah, TD is showing the same thing. So I think it's because the German market, depending on where it closed, right? If it closed much higher, I don't know. It is weird. Or hasn't closed yet. From yesterday's close, maybe it closed much higher. And it's in euro, so it's like extra confusing. Guess we'll find out when we open. Morning, Molava. Tupperware 2.5%. Give me up a little bit. Rival hanging out. Just hype this morning, John. Hype. About 4 minutes to open. Your pre-market gainers, you've got GCT on here. Only recognize that's up 97%. Only one I recognize. Bad move. Was that from earnings? Wow, they barely beat. 127 million versus street estimate of 124. Why is it up so much? Yes, 39 cents up from 13. Sales. Quite the earnings reaction. 100% move on the old Giga Cloud. Alright, SPY. Is it at the low of the day? Coming into open? Closed. You guys see the Ryan Cohen tweet? We can look at this real quick. I didn't do the math, but the average CEO is paid 351 times as much as a typical worker in their industry. But then this says 70,000 per year's work compensation, and CEO compensation's 24.2 million. This is not 351 times 70,000. It's off by like 2% or something. So the 351 times the tinfoil on that. A Section 351 transfer occurs when one or more persons transfers property to a corporation solely in exchange for the corporation's stock, and immediately after the exchange, the transferor or the transferors as a group control the corporation. So maybe he changed the numbers to hint at 351. I don't know, but it is a little strange that the math wouldn't even be right. With that, we have the bell. You guys want the bell? No bell? Bell. Better be ready for it. It's in 30 seconds. Heavy duty tinfoil? Kind of, but it's kind of interesting. I mean, I don't know the 351, but it seems like he's trying to say something if sharing a tweet with math is not even right. So maybe it's not 351, maybe it's something else, but maybe it is 351. The article specifically references 351? What article? I'm just looking at this little meme. Little image. In that post specifically, I don't know. If he is talking 351, it seems like he's talking about barbecue for sure. Like, or highly likely. Oh, we didn't get a bell. Oh, sorry. Market opened. Macy's is up 6.3. Camping World's up there. Costs. Yeah, Gig Cloud's even on my watch list. Rivals 2%. Yeah, see, barbecue was up 3%. So, yeah, I'm not sure why the German market. Really weird. Oh, it's just because of a huge spread, maybe. Because now the German market's saying it's only down 1%. It's got to be what it was. It really doesn't matter much. I'm getting pre-market data in here anyways. So we're looking for a hold 2340 or 23 flat area. And if it does start to hold there, I'll probably grab some more. It's at 24 cents. SPY's flushing down. This was the kind of the move I was telling you. If you want to scale out of your puts, see if we break this low. I'll let the market fill out for a bit. See where we're gonna go. Yeah, pretty good flush there on SPY. My final response represent 351. It has to be deeper. All right, yeah, maybe Keenan. No, I know. It's to me if the math is wrong on that thing, which I still haven't even checked, I should probably double check. But if the math is wrong, it seems like there's something else going on. He's trying to communicate. So a little head and shoulders here on the 5-minute on barbecue. There's 2, 3, 4. That's kind of that. Where's that level from? SPY's flushing down. That's from back here, right? Yeah. So that's a prior support. We've got VWAP just below there. Wherever this is. 23. Yeah, so looking for a 23 hold. If that doesn't hold, 2146. 22. Yeah, kind of 22 even. This hourly candle, if we do close this hour on that engulfing bearish, that wouldn't be good for the rally to continue yet. 70. Nice, passing cloud, well done. Now the rest are free. 24,570. Yeah, so it seems like he was trying to say something with that. I didn't like reverse search, Google search that image. I don't know if you guys did. It was like, I would just check to see if the original picture was wrong or if he changed it. I could find that. 22, 25. I'm not selling here. I'm in accumulating mode. Yeah, so we didn't hit a level that I wanted to sell at. Trade even. If we hit 30 cents today, I might. Looking to maybe add, let's see, 2207. This could be the low. We'll see. Where the momentum takes us. Gap's up 5.5. Yep, that was a nice sell you got there, passing cloud. We just wicked out of that area. Back west and wall still looking good. Regional banks still good. Neo with a pretty big sell-off down 7.5. Not what I wanted to see on Neo. Fubo holding up plus 1.7. Charge point down 1.5. Barbecue, little handle there. Oh, it has a gap up there, so we'll see if it finishes this cup, or if we just start to get a handle before then. This could happen before FOMC because that's not till 2 o'clock. Oh, barbecue showing some support there. Pick up some shares. Oh, shoot. And then it ripped. Can get a better fill. There we go. Please, mister, please. Side indicator's pretty good. Remember, the sell's the hard part. Yeah, that's true. Bought 20,000 shares. Nice. Scaling in. Slowly. I'll have this little head and shoulders, so. Wait. I'll wait a little longer. It is at VWAP. I feel like it might want to move a little further. Could be wrong though. Might coming down a little bit more. Boss is up 16%. This is up 6. Ah, rival. This is what I wanted. Up some arrival. I buy into that strength, but I was waiting for it to show some show some strength, and boop, there it is. Here's your strength. I mean, it's held such a nice level too, so it's kind of just hold it. I feel pretty comfortable. Open doors up 4.5. Nordstrom's even up a little bit. Interesting. Rival 5%. Oh man, this tiny float. This thing could get crazy. You can get nuts. I want to see what happens around $4 again. That's a big level. Once you're past that, you've got. I'll probably add to it if we break $4 and hold above it. Yeah. We've got a gap. I mean, here, this get moved. Locked. There, that's gap fill, end of support. We'll see if it rejects it. Might close, I don't know. Barbecue hanging out. We've got bearish MACD right into the 9. That VWAP barbecue, so a couple little short-term bearish indicators here, but price action wise, so far it's held up from resistances from yesterday, so it's looking good. Even Vegas. New low there on SPY. Kind of wanted this short, but I'm not gonna chase it. It's down 0.5% already. I think there's still downside. Whoa. Oh, 940. Someone's speaking. What do we get? 940. Oh no, that's 1240. That was weird. I'll just take the bounce, I think, from here. Kind of in the middle of the range. But you can kind of see this barbecue up a little bit there. Kind of see where it's at. Channel it's kind of in. It's kind of stuck to it. So if it deviates. Barbecue 24 cents now. 0.4. Rivals at 10%. 3,950. Here it is. Testing $4. I'll put the Discord link in there for you guys. There's a rejection on 4. What's locked? Nothing should be locked on Discord. The stream room I'm in is locked if you're not a member. But besides that, everything's open. Barbecue, it's showing nice support. Certainly is. Above that 2340 now. Gotta keep an eye on arrival though. This thing's gnarly. Barbecue 2450 positive plus 1.6%. Okay, so I'm fine to chase it. If the dip buy was not making me comfortable, get the breakout. See it break this shoulder. $24.85. It's up 3%. Nice solid bounce off of VWAP area and yesterday's resistance, so everything looks good there. See what Arrival wants to do up here. W keys up 8%. Barbecue still showing some strength. 3.5%. Arrival coming down. This will be a big break. I mean, you saw what happened yesterday when Arrival broke. Crazy volume and then crazy dump on it. Okay, I got partial fill. We could still see move back to like VWAP 2340 test. Might get some more if we do it. But I kind of want to add to arrival if it breaks at $4. Pretty heavy into barbecue for sure. 25.34 up 5%. Whew. Need some more yas for this. Ow. Kind of hanging around there. Barbecue, rip, barbecue. Excuse me. Starting to think you're a bot, John. Like an arrival up here. I'm liking the high VWAP. The volume this morning is pretty good. Yeah, it's better than yesterday's. Right on here. Not crazy. Barbecue 25 cents. Highball, red candle there. I like the high VWAP though. Barbecue holding out, 25.40. Spy's coming down here. A little flushy. Ah, rival. Big rejection there. Still liking it though. I mean, it's holding up nice levels after that huge rally 2 days ago. So, suppose I'd cut losses. Start breaking this level, 31 or so. Barbecue moving up, 6.7% up. 7.25. 25.89. That is neat. Hey Damien, barbecue's doing good. It said it's at the high of yesterday, basically. 2599, it's up 7.25%. So had a little dip to VWAP this morning, real similar to yesterday's open. Yesterday we opened a little dip around VWAP, Today's was more violent though. More violent of a dip, more violent of a rip. And so probably increased volume, which is causing that. Yep, have higher volume this morning. So able to make moves faster. How do you find them? Lots of ways. You can look at scanners. I don't know. Once you find it and you see it has, you know, potential to move, put it on your watch list and then kind of keep a track on it. 599 barbecue. Oh, we're definitely hitting 30 cents. I think we're hitting it today. Good add, but we'll see. See if we're double top here or if we start breaking. I mean, it's early. Only been 20 minutes. Morning, Robin. What kind of scanners? I don't know. I mean, I'm not like, I don't know. I don't usually need to go to scanners to find them at this point, but if I don't already have like a pretty big watch list of stocks that I'm familiar with, then yeah, I would look at scanners, or screeners, whatever they're called. They're screeners, I guess. There you go, 9%, 26.28. Starting to fill this gap, I think, already. Yeah, we're in the gap fill, so yesterday we're starting to fill it. Today we just need to break the high and then we'll start filling it. Yeah, Rival staying up nice. That's not very nice, Rayan. You bought with your fake picture. I don't like that kind of negativity, hoping people lose money. Rival moving back up to VWAP. Barbecue about to break yesterday's high. There it is, 26.50. Up almost 10%. 50 cents to the cash getting machines. Jeez, there it is, 26.75. Should have bought more. I think there'd be a reverse merger. I mean, anything's possible. We don't know what's gonna happen. To me, it's still a trade, and whatever I hold, I guess, into next month will probably be more of a lotto, because it's possible this thing gets suspended at any time and ends up worthless. That's kind of how I'm looking at it. So I'm not expecting that to happen during the day, though, even though it's possible that happens as well. So yeah, it's risky. Target puts. Are getting bad news. So better than Griffin at those lows for sure. 27.20 on barbecue, up 12%. Rival hanging up 5% around VWAP. Spies moving down further. See if we get a bounce on this kind of channel from yesterday. Somewhere in this range, I would imagine. See if we move up or if it's just bounce the top of the channel and we're selling. There's not a limit halt, but there are other ways they halt it. So it'd be like a suspension on news, I believe. And then, but yeah, as far as like volatility halting from it moving too fast, that doesn't happen on barbecue. Survival moving back up to that 4 level. Barbecue wicked up there. Maybe making a little cup here, maybe double top. Volume this morning though is solid. Even better than yesterday. So weird. $0.26 plus 7.8%. Might be getting a little double top. Out of SPY puts back in barbecue. Nice. VWAP is at 2465, so yeah, see if it holds that level. But it looks like it is maybe making a little double top here. Might be bouncing back off 2340 also. All possible. That was yesterday into close. Yeah, yesterday's close was strong. Closed above that 2340. Today it just basically wicked down there. Thank you guys for your likes. We're at 24 likes. Well done. Hope you're having a good morning in the market. A little extra powder. Rival consolidating up there. SPY bouncing a bit. Bouncing to come to the bottom of that channel. There's a move on barbecue back to VWAP. 2451. Made a little double top there on the 5-minute. Good volume this morning. And it's just not quite a gap fill. See, 2720. Not quite to resistance. See more before profits. Could be a little cup and handle still too. MACD flip bullish. Got green over the 9. Green, red to green to red. 24 cents. Rivals holding up. Just morning volatility, I don't know. The RSI on the hourly is pretty hot, for sure. 77.59. So today's, let's see, Wednesday. I think we could still get that push to 30 cents today, or even higher. But I'm curious what happens at 30 cents. I'm hoping this isn't just a front running the 30-cent move. We were seeing a sell-off before then. Oh, just little morning volatility. So go with your coffee. Yeah, target's down 0.5. I think it's a earnings sell-off continuation. HPC up 5.5. Might be getting a bottom here on SPY. I'm gonna save my my buying power for. Maybe I can do both. I'm not sure. Try. Can't remember. Okay, I can do both. Cool. Alright, I went long on some futures there. I think we're bouncing on the bottom of this channel. Might take profits at the top of the channel, or see if we set up a reversal pattern. RSI is pretty low on the buy also. Might be early, might add to it if we come down further to 410. Rival hanging out above VWAP. Barbecue hanging out above VWAP. Just bear flagging, I guess. Alright, SPY's come down more. Barbecue's bouncing back up, 7.5. Rivals holding up around VWAP. Barbecue's going for it. Yeah, I was a little early on my channel bounce there. So now I'll just look for that horizontal support for 10, 26. 26? Yeah. Should get a bounce there. And then we have FOMC at 2, which should bring a lot of volatility. GME actually not doing too bad for how much the SPY's down. I was wondering if GME might have a continuation. I consolidate yesterday and maybe some today and then keep ripping. Not too optimistic on it as it just moved with SPY, and I think SPY's pretty weak. But there's SPY flushing a bit more. Setting up this inverted cup. See if we get a handle today or tomorrow into the next end of the week, I guess. Thursday, Friday. Back west down 3.5, yeah. SPY's pulling everything down right now. Wall's down 5. Barbecue doesn't care. The volume on arrival today might be crazy. Already at 500,000. 580. See if we can break this resistance now. 26. Highs maybe setting up an RSI divergence. No, it's not yet. Still just melting. Barbecue breaking out to the upside, maybe 26.48 plus 9.8%. IMMP 10%. Looks pretty good. Probably want to see volume come in, break that bull flag. Got an RSI divergence there on the 5-minute, so might be getting a gap fill there. See if you get an engulfing candle, 410.56, pretty close to the level. Not sure if it's quite low enough yet though. VWAP is 411.60. I think this is necessarily the bottom. I think we're just getting a little retrace. See if we can build a little invert head and shoulders or something. Barbecue still at the high there. 2639. Rival hanging out the high too, 38.60. Need to see that big push through $4. Microvast back on the ups. Well, it had a big sell-off. Did they offer shares? Oh, this is Microvast. I get this one confused. MVIS. Microvision. Yeah, looks like we're gonna get maybe some new lows in the SPY first. We do have some RSI divergence here on barbecue, but price action this thing doesn't really have king. OTC king. Go IMMP. Break 280. Yeah. Yeah, I like that level. 20. Yeah, I agree. Agree with Don's assessment. Like to see that gap fill. Now it has that RSI divergence on IMMP. Buy moving up. Maybe. Maybe. Not quite engulfing candle. Not a lot of volume, so this is a temporary move up. Might close my longs at VWAP there. We make it. Arrival just consolidating below that $4, just ready to explode. We've got Waller at 1240. Don't think I'm not on the calendar. Welcome back, Donero. Hope you've been good, man. Show up in chat, start giving advice. Love it. Yeah, at 7 we had mortgage stuff, mortgage refinance, and commodity inventories at 10:30. Money supply at 1 o'clock, FOMC at 2, Waller at 12. So not a whole lot until later in the day. Yeah, Arrival's looking good too. Holding above VWAP. Holding, I mean, yeah, this thing is holding such nice levels. Expecting it to break out above that 4 and move up to 548, 5. But sometimes expectations are met. So prepare with stop losses and good risk management. I'm trying to climb back up to VWAP. Yeah, if it's a biotech or whatever, you're gonna it's hard to trade those with TA or momentum unless if they're like a legit company making money. You've heard me say on here a lot. Otherwise, you're just waiting for their catalyst dates and yeah, sketchy trade. That spike on Monday. Yep, all of us made bank on 10% on GME on one day. Yeah, I don't remember what it was. What do you think, Don? Was that SLD? That's kind of the conclusion I finally came to. That was an SLD day run. And so I thought it'd continue into Tuesday. And it's not, so I'm thinking the stock's still fixed. Just trading like a normal stock now. So consolidating and then maybe keep going. Yeah, SPY's just kind of bear flagging down here. If you're playing the book, well done. That was the catalyst. Yeah, maybe some 200% options, sure. Could not have seen that 1-day move coming. Been just slowly grinding up for weeks. Hopefully doesn't. Herbalife? Let's see what's traded. Yeah, good. Maybe look for signs of a reversal, but it is at a nice support. Holding. Maybe cash cleared puts or something on it. Not very liquid, those options. Yeah, I would look for some signs of a reversal, because it might just flush through that support, but you definitely caught the support. So that is neat. Buy down 0.8%, 410.75. Upward channel and SLD. Wasn't telling for me, I guess. I'm moving down more. Looks like it's gonna make a new low. Yeah, new low of the day there on SPY. Or 10.35 it hit. Got 410.26. If that breaks 409, 07, somewhere around there. It looks like it might actually want to break this with this bear flag. Yeah, cash cleared puts. It's just the options aren't very good on there. On Herbalife. Market just in meltdown mode. Thought about taking the short at open. We broke that low. That didn't. Well, we'll wait for it. Kind of the area I'd like to go back long, but be patient because if we break this, we've got 409. I did close my loans, took the loss on it. I'll wait for the setup. Look at that little bull flag. Oh, it's 10 minutes. That looks so weird. But yeah, look at the little flag on the 10-minute arrival. Bull flag arrival. Oh, is nat gas having a little rally today? At 3%. Look at you. Head and shoulders. Support this thing. Barbecue still hanging out. 25.81, up 7%. Rival up 3.5. This thing just ripped out open. Wish I was paying attention. Buy little green candle here. 410.34. I've got 410.26 for a low. Look how low the VWAP is though. That's crazy. It's really pulled the VWAP down. Barbecue down to 22 cents again. See, maybe by end of week. Depends on how high we rally first. Oh, there's an RSI divergence there. Back in where I closed. It actually bounced on the level. Got a higher low on the RSI here and a lower on the chart. In with that support. And looks like it's starting to form a little head and shoulders. See if we retest 410.60 area. And the head and shoulder, or the cup is completed. The inverse cup all the way down right to our line, basically. We'll see if this gap gets filled before end of week for the handle. Didn't lock that. Great. Great. Barbecues RSI divergence. See if it affects that. It's not yet. Rival still 5%. Buying Netflix when they spun off DVD. Way behind. Well done. Barbecue still hanging out at the highs. This thing's gonna keep going. I think so. Head and Shoulders getting completed, it looks like. Pac West down 2.3. Get a break of the neckline here. We got the RSI divergence already, and that was confirmed when this candle closed. Barbecue still hanging out, 25.90, 7.5%. They can take my money, but they can't take my gains. Alright, see if we get a bounce on the 410.65 shoulder here. MACD flip bullish. See if we can get a green over the 9. Barbecue's still hanging out the top. Good, Don. All right, now we're getting this right shoulder. See if it holds or flushes. Bounced on that shoulder. Good for reversal. Get above this neckline. Get above VWAP. Get back into that channel. Fill some gaps. FOMC is at 2. Barbecue is at 26 cents. Well done, barbecue. Hop on SPY. Back up to VWAP. Rival getting a little jumpy. 4 hops. Inverse head and shoulders here. Yeah, barbecue doesn't care about the market. It's beautiful. I've got Coles. I've got some stuff green. Some earnings plays. Rival, Coles, Silvergate. Barbecue about ready to break out, maybe. See, 26 cents. And with a rival. 11 o'clock margin calls. I'm exaggerating just a bit. Ah. Getting a squall here. And GCT is just sold off. That was a crazy move for their earnings. Like a 100% market move with just barely beat. They had Brian Cohen on their earnings call or something. All that horsepower, no room to gallop. Is IP still flushing? Crazy, man. Yeah, I like keep on doing cash secured puts. I'm like, I'm just gonna keep waiting. There's no reason to rush it. I mean, long puts would make sense, but it's already so low. Well, it's not at a certain price. Barbecue has to get back on the NASDAQ to get options. To be able to go long on options. Or to be able to trade options, basically. Open options, I should say. Create open positions on options. So, while it's an OTC, you're just, whatever you have, and you can exercise it. But until then, you're not getting any leverage. Old NASDAQ. Old uplists. Which could happen fairly quickly, I imagine. Maybe next month. Possible. Inverse head and shoulders may be failing there. Didn't break the neckline. Yep. Didn't break it. But it's still holding the shoulder. Wait and see. Got some volume in there on SPY. Barbecue 2560 plus 6.2%. GCT had a pre-market move of 100%, but now it's down to 45%. Barbecue coming down a little bit, it looks like, to VWAP. That's at 37.80 plus 6%. 24.95 is VWAP. All that affect meme stocks and inflows, I wonder if it gets uplisted. I don't know. Coming down here, retesting its lows. Little double bottom. Well, 7.3. Point 5. Pretty big move down last 3 days on SPY. Oh, you're saying if barbecue rallies, how it'll affect the basket without options? Yeah, I'm very curious on how barbecue looks in like on a big day. We still haven't seen that. $25.30 on barbecue, up almost 5%. Two spies making a double bottom here. Thank you guys for your likes. Appreciate it. Coming up 5 minutes to 11 o'clock. We're at 29 likes. 11 o'clock is subscribe hour. If you haven't subscribed, do it. Do it. Maybe, Jose. I don't know what the reaction will be with it on OTC. I'm very curious about that. Because it's just, OTC is just not nearly as traded. Rivals like it's moving up a little bit, 8.7. Get a break here or whatever. Rival, break that $4 hand. We go up to 558. Oh, we lose 410 here on SPY. I think got this level back here, 409.07. Might be double bottoming. Since 2000, Social Security benefits have lost 36% of their buying power. To be able to live as well on Social Security benefits as a beneficiary did in 2000, today's retirees would need an extra $516 per month. UK economy will grow faster than Germany this year and avoid a recession, the IMF has said. Arrival 8:15. Arrive at 5:48.5. Dude, what's gonna happen if this thing breaks 4 again? It got so crazy yesterday when that happened. Barbecue kind of to VWAP, 5%. Positive still, 23.50, 25.35. Arrival 3.9, up 9.5. Germany plans to order tanks and howitzers worth $843 million to replace equipment sent to Ukraine. It's looking kind of fleshy still. Oh, I've been muted. Hey guys. Thank you. Let me know, Alessandro. I need to turn up my monitor so I can better tell when I'm muted. It was quite a while. Okay. Well, barbecue below VWAP. I don't know where I even left off. Oh well. Said a lot of important information. Basically how you could 10x your portfolio today. So it's too bad though. I put it off there. I guess you'll have to subscribe to hear it next time. Found that again. In case I'm not did it again. You suck again, Happy Money. Suck again. Look at these wicks down here. Hi. Look at you. Look what you've done. I still want to see 23.40 and 23 cents level hold on barbecue if it does come down. Kind of important. But I mean, it's had a great move so far this week. Only what, Wednesday? So our RSI divergence is starting to fail. Volume definitely got shut down on barbecue. Retrace tomorrow and Friday. I'm moving up. Just need me to close my contracts. Next time I call, can print. Yep, we'll give it time. Gap fill to 30 out the window? No, I think it's definitely still in the window. Yeah, we're making new highs. I mean, it's looking good. Gonna have to retrace some and consolidate sometimes, so. Can't be lucky all the time. You can be smart every day, yo. Squeeze before July? Yeah, if there's the right catalyst, sure. Besides bankroll? Whatever you can afford and not be emotional about losing it. MWG was trading at $16 1 month ago and is now 70 cents. Huge illegal naked short position. New IPO. No dilution. 7.2 million float nearly locked. Be patient. May take days, weeks. You heard it here first, folks. Out off the press. Sorry. Yeah, whatever you can afford without being emotional if you lose it. Or lose sleep over, or, you know, a small enough amount to where you can watch it go up and down. Doesn't phase you. But I would start with paper trading. Start with paper trading, get consistent. You know, do it for 6 months and see if you're green. If you're green at the end of 6 months. Nobody wants to wait that long, but that's your first rule. The stock market is a transfer of wealth from the impatient to the patient. So if you're impatient enough to paper trade for 6 months, don't ever use real money. Oh, is he banned? Yeah, maybe you couldn't see it because he's timed out or banned for you or something. No, don't look at MWD. That was a joke. You got the ticker wrong anyways. It's good. I'm not telling you the ticker. Don't go ticker chasing. That beautiful cup and handle breakout. Could have just held a rival. I guess you never know. Good risk management to take off. I closed out here on this engulfing candle that first 35% day. Did get back in here. Closed out here. We're back in it because this thing just keeps holding. Be nice. Nice. Little tick up there. Got VWAP. VWAP's very low today though. 411.15. Stick to the bonds and ETFs. You're used to? Yeah, I'd say so, for sure. If it's, you know, moves enough and has enough liquidity, no reason to trade something you're not familiar with. I moved to VWAP. Yeah, very important DD. I must read it. Not DD if it's in media. That's media.
I'm here with Mr. Kramer.
Oh, hold on. Did you make this? You turn it down. Hold on. Move to VWAP on SPY.
Something to say about something.
A lot of people feel that I've antagonized these Reddit people. I don't give a damn. They have to face up to the fact that this stock is up huge. Yeah, I did recommend the sale of 400 from the hospital bearer. Fuck you, anything that's a mistake. This company, maybe, we're now close. Why? Because when
there's a rip on SPY.
And you don't take questions, and you provide no evidence other than your building fulfillment centers, well, I gotta tell you, listen to me.
bone selling dog food. Maybe I'll
There's
get
a
into
spy
cat
rip.
food, huh? I got 5 cats.
Got 5 cats. Did you make that, Ace? Close your calls? This little cup for me here. Look for a pullback to maybe 411.10 to go along. Arrival's breaking out too with it. Dang, should have stuck with my RSI divergence. It was working. All those wicks down there too with the support. Oh well. I'll wait for the pullback. Arrival. Let's see what you can do it for. Can do it. Took a nibble at 3.6. Nice. He wants to break 4, can do it. Just ripping. Making this yeah, basically VWAP there. I think I'm looking for long. Rival not breaking $4 yet. Barbecue kind of hanging out around VWAP. Just below it now. Up 2.6. Oh, look at that fleshy flush. I'm going long there. Alright, yeah, it looks like it's holding that level. See. Considering closing some barbecue. Oh, I like it though. I don't want to try and time it too much. Full flight being built now in the 5 minute. Bye. Rival 9th. 3904. 3940. Be a big break. I should probably just add to this if it does.
The ego on you.
He's Ventura with the gifted membership. Oh, it flushed below it. Thank you, Ace. Appreciate it, man. Blue DJ. Hope you're not a bot. Better make your way to chat and come thank Papa Ace. Don't cry, lords. Nothing to cry about. Stop whining. Kind of below support. Not liking that. Kind of a cup and handle maybe on the 1 minute here. Warming. Barbecue holding VWAP. Rival. That's kind of rejecting there. Barbecue's right around VWAP. It's up 3.5%, Lords. Come on. Wall Street Journal says bank stocks near meme stocks. They are fun to trade. Media on Discord. Come on, Arrival, you can do it. So close. You're adding to it here? Yeah, it's not bad. I mean, got this RSI divergence, which hasn't meant a whole lot on barbecue and OTC. So, holding this 50 moving average nicely so far. It's pretty overextended on the hourly, but settled down pretty good today, actually. It's a bit high. That doesn't mean it can't go higher. I'm liking up to 30 cents still. So I might be able to scalp the last little bit. Gap fill, that since didn't really hit us. We kind of hit a resistance here this morning. I was wanting more. But yeah, that is stepping stones. Looks good though. It's under text channels. You'll see media. Apes are breaking computer share by just calling them too much, or what? No, My Discord's free. Kid text. It was a joke, Lords. It was just a joke. You just have to expand it. You have to learn to use Discord. They hired a third-party call center. Are you kidding me, dude? That's insane. Oh, there's a little pop on barbecue. Above VWAP. Arrival. High of the day. $4, man. $4. What you gonna do? What you gonna do? Yeah. So barbecue uses what, ATS or AST? I don't know what AMC uses for their shares. So that one's a different company. You're just not seeing it. Under media, I see it. Under text channels, you don't have text channels expanded. You gotta learn how to use Discord. That's the problem. Problem is not Discord. Problem is the user. What is space doing? 50% down. Yep. I hit right at that resistance yesterday. Yesterday's candle, the way it closed, was kind of bearish too. Inverted hammer. And you're in that resistance line. So could still continue though. See if it holds this 9 moving average. Seems to have liked to respected that. Anything else still looks bullish. Looks good. A lot of markets selling off today. And we've had a lot of frothy runners, so makes sense. Rival 3940. Oh, SPY flushy there. For 85,000, 28 in their queue. Instaface, Snapgram. Barbecue looking solid. Nice to see a pop over VWAP there and some volume. You're making new highs today after all. SPY wanting to make new lows. Oh, just retesting the bottom. Could go long here for the triple bottom. Maybe. Kind of a bear flag on the hourly. Rival just toying with us at 396. Well, hopefully it does a sustained move and uses that as support and not this crazy thing that happened yesterday. It might be pretty explosive though through that $4 level. Town is so dirty. That's right. Yeah, AMC. I think they use computer share also, huh? I think barbecue is ATS or whatever. AST. Ah, yes, McCarthy. McCarthy will move the market at all. Or no, Waller. Oh, wait, you have McCarthy? Oh, yeah, that's right. You said McCarthy, but
only with banks over $100 billion. So 1/3 of that universe has already voluntarily adopted these standards. It's time to impose it on all, and I yield back.
Gentleman yields back. Is there further debate? Gentleman is from Kentucky. He's recognized to strike the last word for 5 minutes.
I appreciate my colleagues' attempt to improve the bill, to bring up
oh, that's
an idea that's worthy
Barr
of
talking right
merits,
now.
deliberation and consideration, given the fact that accounting treatment of available for sale securities does get to the heart of what happened with Silicon Valley Bank and some of the other bank failures. But the amendment is really outside the scope of the bill. So what I would encourage my colleague to do is raise this in a
I'm watching financialservices.house.gov.
Discuss it with the gentleman.
McCarthy gonna be on here.
And he's certainly free to
Barr.
introduce this at another time where we're actually having a conversation relevant to accounting.
Here are some bad acts in the office.
Of available for sale securities. But this bill is not that. This bill before the committee today is
$4 on arrival. Did it? SPY kind of bouncing there too. Look at that break. Look at the volume. 470.
That's why I urge my colleagues to
Proper.
vote against the amendment.
Happened.
We can talk about
Shall I add?
the other comprehensive
real
income,
break.
accumulated other comprehensive income at another time and in another bill, but it doesn't make sense in a regulatory
If
transparency.
we get
Will
So
the
I urge-
gentleman yield?
silver liquid.
I just want to put on the record, we had requested of committee leadership that a freestanding bill on this very point be made in order for this markup. It was rejected. So I think this is a germane amendment. It does broaden the bill. If it's meritorious, please vote for it. I will yield back.
I'll reclaim my time, and I commit to working with the gentleman on future markups on this issue, which again, as I say, is worthy and meritorious of conversation, but again, doesn't fit in this bill, which is
I need to add to this.
transparency bill. With that, I yield.
Gentleman yields back. Is there further debate? The chair recognizes the distinguished ranking member of the full committee, Mrs. Waters. Strike the last word for 5 minutes.
I move to strike the last word. I support Representative Sherman's amendment, which would remove the ability of a large bank to decide on its own.
And I guess
not hold capital.
we can count 430 from yesterday's resistance. I don't know.
What became very clear following the failure of SVB Signature Bank and First Republic was that some banks were holding capital against assets on their balance sheet based on the value when they purchased it, failing to account for falling values as interest rates rose. Many of those assets were safe assets like treasury securities or mortgages, but interest rate risk, which is among the ABCs of banking basics, was ignored at these banks, even though the Fed was very clear in signaling that it would continue to raise interest rates in the near term to deal with inflation and follow through on such intentions. These banks claim to hold capital against a pretend value of the assets. The problem with allowing the banks to opt out of raising capital is that the bank executives have no incentive to hold high levels of capital. Their own compensation is derived from the stock of the bank, and if they're suddenly required to issue more stock, it can lower the executive's compensation and net worth. Now, we've seen yet again
Jeez, Neo.
what happens when banks are given discretion over whether critical rules apply to them, and any
think it failed on
institution
arrival.
over 100 billion has demonstrated that they do pose risk in our financial stability. For these reasons, I support the Sherman Amendment. Everyone should support this amendment. This became very obvious to everyone. There was a lot of discussion about this. Even, people on the
40,
opposite side of the
90.
aisle agreed with me at one point when I raised
I get filled in this red candle.
about the securities that had lost their value. And so there's no reason why we shouldn't all support
Leave it. I'll wait.
the Sherman Amendment. And
I like it.
I just
It's
want
good.
to say that
Barbecue
while
above
we,
VWAP still.
sometimes get off in other directions when we have the challenge of dealing with something as serious as we've experienced recently, the failure of these banks, we should not hesitate to correct
Yeah, I was just talking about it yesterday.
the problems that we have
Don, I think I'm gonna
witnessed,
go
that we've
into
seen, that
going to
everybody
politics.
understands.
I think
and
I
the
did well,
role in the failure
in
of these
Congress and
banks.
like
If we don't
setting
do this,
rules and
one
legislation
would
and
question,
causing the stocks to do
why
certain
is it
things, and then
we are
somehow
not
always having a position in the
tackling
right direction
what
before
is
it
so
happens.
obvious? And
I think
so
that's kind of
with
how you
that,
should do well in the
would
market. Like
ask
that's probably the only way
everyone
to do it.
support this amendment.
I think it would
makes
work.
good sense.
Just
We know
have
that
to
it is needed.
force it,
And
force the stock to move the way you want it
I
to.
will yield back to Mr. Sherman if he would like to
That
try and
makes sense.
convince, that we could find a way to take a standing loan bill out of what he's done and not make the commitment to deal with it down the road somewhere.
Will the gentleman yield for a question to sponsor of the amendment?
It's my time.
Oh.
Do you want me to yield?
Yield to the gentleman so I could see if I could ask a question?
Does the
I'm
gentleman wish
happy,
me to yield to him?
yes, if the
Then I
gentlelady
yield
has
to the
yielded to me, I
gentleman
will
from
yield to the
California.
gentleman for a question.
Real quick question. My understanding is that the AOCI accounting treatment is within the discretion of the regulators under existing law for those institutions
Yeah, I got filled on arrival.
in excess of 100 billion in assets. Is that the gentleman's understanding? And they have not elected to
I
use
know that they don't actually
There's a retest
do
of that
it,
$4 breakout.
and if it's in their discretion,
got-
I could send them a letter asking them to do it. They have a shredding machine over there, and so I think it's incumbent upon us to pass this legislation and make them do it, because I think the gentleman has recognized it's meritorious, and hopefully we won't stand on whether it should be done today or tomorrow in this bill or that bill. I hope to have his support.
Reclaiming my time, I thank the gentleman from California for further explaining how this could be handled and not rely on those people you don't trust over there, the regulators, to use their authority to do it instead of having legislation. With that, I yield back my time.
The gentlewoman yields back. Is there further debate? The gentleman from Missouri is recognized to strike the last word for 5 minutes.
Last word. Thank you, Mr. Chairman.
I know.
This has got some
They're
interesting,
geniuses.
potential
great line of
from
work,
my
man.
standpoint, and I just kind of like to engage the sponsor
Like,
with a little.
and you also get a salary.
So we're doing
I would
this
maybe even
only
just do it
on
for free.
securities that are held for sale, right?
Yes. I've thought of less modest versions of this and decided to go with the most modest version.
Okay.
Rival
Do we
4
not
110.
right now accrue interest
Very good if it
on
can
those,
slowly climb
whenever
above.
you show your
Have some
account, whenever you do
have some
your balance
sustainability
sheet,
in this rally over $4.
show the accrued interest on those securities?
Unlike yesterday's crazy move.
Well, all interest earned is income. When you receive that interest in cash, it's part of the cash balance of the bank. but what isn't shown is the
Volume today's legit on
unrealized.
arrival too. Still
So you
more than
may
yesterday, I
have
think.
invested in say a 10-year 2% bond.
W
Maybe,
key up
you know, on December
20%.
30th, if you're on a December 30th, 31st year, you may get an interest.
This camera's full
That
of good
interest payment
traders.
Is one of the assets of the bank.
Our government probably has the best traders.
2/3 of these medium-sized banks will list that bond at their acquisition cost. You and I know that in today's world, a 2% 30-year bond is worth an awful lot less. And so if it's being held for sale, that loss would be subtracted from the bank's other capital to determine the amount of capital that it has available to absorb other
I'm
losses.
going to get to the loss in a second, but you say here in your bill, all accumulated other comprehensive income components. So my initial question is, if you're on accrual accounting, would you not already have that interest in your income account?
Accrual accounting, you would have on your balance sheet only the interest payments you received. The problem with a 30-year bond that's yielding 2% is that the interest rate payments you're going to receive over the next 30 years
Do it for the insider trading. Yeah.
is
And out of the
only
kindness of my heart.
2%.
Isn't interest receivable on your account? On your balance sheet?
Interest that has not accrued. So if you own a bond,
Okay, I want
and
to
you
see
get
this
your interest
4-level
payments, say, on
hold
December 30th, and it's
on
got another
arrival.
20 years to run, you do not.
Or we
you
are
do not
dead on
list
arrival.
the
I've
interest
been waiting to
payments you're
use
going
that
to
one.
get over the next 20 or 30 years as
What
an
is this
asset.
company?
You list.
That's not a
Oh
receivable.
yeah, Electric Solutions.
No, it's not a receivable because you haven't earned it yet. You
Like
earn
their
interest
headquarters.
by letting the
By
borrower
holding all
hold
the
your
bonds.
money.
Tax-free
It's
country
money
of
that's
Luxembourg.
interest you're gonna receive.
Etchy, I love it.
You're going to receive it.
So it's a receivable sitting on your assets.
The word receivable in accrual accounting means you've earned it.
You have earned it. You held it
Well,
during a
now,
period of time in which
if you loan me money for 30 years, and it's been 1 year, I owe you the interest for this year.
you owe it on a daily basis.
But we've got another 20
We
years
take
to
that- we
run.
take that amount
You
that
do
you-
not list as an asset the interest you're going to earn over the next 20 or 30 years on a long-term bond.
Not on all at one time, but you do it on the daily basis that you accrue it. That's correct.
If you hold the bond for 30 years, then by the end of the 30 years, it will be accurately stated on your balance sheet, because at that point, you're
Holy
going to get paid.
Okay, that's not, okay. The thing about this, the bill that's interesting here is that you would realize your loss, though. Is that correct? So whenever let's say a bank goes over the 100 billion threshold, suddenly now their bank would have to figure out what their loss is in their for sale securities. Is that
Yes.
correct?
So if you happen to have bought a bond for $10 million and it's only worth $8 million, you have $2 million less capital.
Okay, all right, that's, okay, I yield back.
We've exhausted that topic in an effective way. There further debate. The gentleman from Illinois, Dr. Foster, is recognized for 5 minutes to strike the last word.
Yeah, well, just to clarify, sort of part of the last debate, the way I understand it is that you earn the interest payments only as you decide not to sell the bond. You know, that's when it shows up. Anyway, so a couple of points on this. That it was not just the available for sale securities, it's also the hold to maturity securities, and really the toxic mix of available for sale, hold to maturity, and uninsured deposits, all right? And that's what killed Silicon Valley Bank and put others at risk. And so that, I think that if we decide to legislate, which I hope won't be necessary, but that you really have to, there's a corner of behavior that involves both of those that are really the risky corner that we have to warn banks away from. And that's why I think it's something, you know, this has the germ of a good idea, and we have to think about how to better implement this. The other thing is that we've suffered in the case of Silicon Valley banks and similar sized banks, is that basically we ask the regulators for a tapered haircut, and we got a fade for those of you who know what that means, when you just basically shave, put a bowl on your head and shave everything below. Those apparently it's called a shade, or a fade rather. And so this is what we got. And there are ways that you can taper this. Just say as your size grows from 50 to $250 billion, that you have to realize an increasing percentage of the losses, for example. That would allow you to sort of smoothly transition into the situation that GSIBs are in right now. Anyway, that's...
Would the gentleman yield?
Yes.
Would the gentleman yield?
Yes.
I would add, as a practitioner in this business for 4 decades, to say that most bankers I know, I won't speak for every bank on the planet, but most bankers have everything available for sale now. And very few banks put a large portion, if any significant portion of their assets, their investment portfolio, in hold to maturity. And in fact, that's one of the tremendous flaws in the Silicon Valley case study. So I just have to get that off my chest. Mr. Foster, I yield back to you.
Yeah, well, thank you. And, if both sides of the aisle are willing to entertain just abolishing the whole concept of held to maturity, and I'll yield.
Yeah, I just want to clarify. For generally accepted accounting purposes, these losses are already recorded. They are acknowledged in the footnotes. They're required they reduce capital when you compute it according to the international Basel III standards. They reduce capital when you're over $700 billion. They reduce capital if you're one of the 11 of the 34 medium-sized banks that has elected this. And so this is a modest proposal that says that which is already being done in many
Rival. Stop loss hunting heavy right there.
Done here. I yield back.
Yeah, and
All
the
that
other
volume below
argument that's relevant
$4.
in this debate is the
How dare you?
the pro-cyclical nature of mark-to-market requirements.
If you're able to watch it, mental stop losses are the best. However, it keeps your emotion
The gentleman yields
in
back.
it, so
Is
can't
there
handle the
further
emotion.
debate?
You got to have stop losses. That's the
If
price.
not, does the gentleman
It
from
triggers there.
Missouri insist on his point of order?
I withdraw my point of order.
Gentleman withdraws the point of order. If not, now the question occurs on the amendment offered by the gentleman from California, Mr. Sherman. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay. In the affair of the chair, the nays have it. A request for a recorded vote has been requested. All those in favor of recorded vote, please raise your hands. A sufficient number having raised their hands, a recorded vote is ordered. Rule 3, C5 of the committee rules, a vote on this question is postponed.
Yeah, I would ask to withdraw the request for a recorded vote.
Without objection, the request for a recorded vote has been declined. I thank the gentleman from California. For what purpose does the gentleman from Illinois, Mr. Caston, seek recognition?
Mr. Chairman, I have an amendment at the desk.
We will pause and let the amendment be distributed.
Rival there at 20%. Barbecue hanging out above VWAP, still looking good.
Mr. Chairman, I reserve point of order.
The gentleman from Missouri.
Getting back to that level from yesterday, but move up there has been much slower than it was yesterday. So hoping we don't get a big rejection like that. That was crazy. NVB. Tiny float, 1.8 million. And then arrivals. Get a rival just to wake up. That would be neat. Break this. Oh, look at that. Such a volatile. Oh, look at GME. It's green on the day.
The clerk will report.
Amendment to the amendment in the nature of a substitute to HR 35.
Barbecue might be ready to wake up. It is noon.
Without objection,
After
the
all.
amendment is considered as read. The gentleman from Illinois.
Thanks, guys, for your likes. I appreciate it. We're at 35. Not bad.
Thank you,
If we get to 40,
and I really want to commend
it's certain that barbecue will make new highs today. So just consider that when you look at the thumbs up.
put together. together. I think we learned a tremendous amount about what happened. I think I will continue to have a friendly disagreement with Mr. Barr about whether the
Green the green
elements
today
of
on
this bill
your
respond to those lessons, but I did
your
want to take the opportunity to introduce the
3%.
amendment to pick up, I think, a really important thing that we did
Yeah,
learn.
still a nice uptrend.
And
Well done.
specifically about the role that a chief
Picked it up
risk
yesterday.
officer plays at depository institutions.
Senior care facility.
I'd remind my colleagues of just some of my notes from the meetings. That
There's a lot of efforts he's got to
most
put
of
in today.
2022, from April until January of the
I've
following
moved lease
year,
determinant. I saw that,
Silicon Valley Bank did
Cameron.
not have a chief
So
risk
it's the day
officer.
before the deadline for the
And we
stalking
further
horse.
learned, both from Mr. Becker
That-
and
something like that?
from Mr. Barr, Michael Barr, that is.
What does that mean
that,
exactly?
The chief risk officer post was vacant in part because the Federal Reserve, in
I mean, I think I know what it means, but
concluded that
what does it mean to you?
the existing chief risk
Because maybe I have
officer
a
had the
wrong
experience
understanding.
necessary for a large financial institution. In the Federal Reserve's report on the failure of Silicon Valley Bank, they noted that the vacancy in a post like chief risk officer removes one layer of important internal oversight. And SVB being without a chief
Thanks,
risk
Bourbon. I
officer was
appreciate the
technically a
compliment.
violation
And
of
hello to you too.
regulations issued by the Fed pursuant to Section 165 of Dodd-Frank, and the Fed could have taken enforcement action against the bank for violating the rule, but the Fed report sort of noted that because supervisors decided not to issue the violation.
So they're moving the
because
date
SVB
for
was
when they can
actively looking for
cancel their
replacement.
leases.
Hindsight is 2020, of course. And in my view, which I hope we'll all share, that was a really critical mistake that our regulators and the bank did make. There should be firm and immediate consequences triggered when a large bank.
I'm ready, Bourbon. I'm ready.
Assets doesn't have a CRO, and that is what this amendment would implement. This would codify Fed rules requiring that large banks have a chief risk officer and require a
Dude, my
large
dad
bank
does.
to immediately
I feel like
notify
they
their
have a lead.
supervisors within 24 hours of the chief risk officer position being vacant. Further, it would say that within 7 days, the bank management would have to provide their.
I mean, the speculation part of your
plan
comment
for how they
is
intend to fill the
the-
position.
of what they think. They think
If
the lease should be fixed
position
before the
remains
stalking bid.
unfilled after 60 days, the
Right,
amendment
we
would
don't know.
subject the
We
bank
don't know
to a
why they
cap
moved
on
it, but that's what you're
asset growth and
speculating.
Potential supervisory actions.
Which I can
as
accept that. I mean,
appropriate
that's
to
a pretty good
mitigate
assumption, I'd
risk.
say.
Now, I do agree with Mr. Becker, who noted that it would take a long time to fill that position. They wanted to have a place. Fine. But I think it's important for us to put some teeth in place so that we provide some incentives for banks in these circumstances that, given the choice between prioritizing the filling of a chief risk officer position and prioritizing growth that could potentially exacerbate depositor risk, broader systemic risk to our society, that they stay focused on what really matters. Finally, I just remind my colleagues that Silicon Valley Bank did not publicly disclose that they didn't have a risk officer until almost a year later in their 2023 proxy statement.
Fubo to
During
hold
that
this
whole
level.
period of time, investors did not have this information.
Should have closed
I'd
more
asked
cash secure puts yesterday.
Mr. Barr during
I
this-
thought
in
about
this
it.
room
I was trying to then.
why they didn't require that
As we
disclosure.
need to
because
sell
that's
off.
really more an obligation of the SEC.
We'll get it.
And so
I think
I
we'll get a
we've
bounce
gotta
though
close
by
that bar.
end of week.
So,
Make
this
that
would
handle on
further,
SPY.
The amendment would also require a bank to notify the public and their shareholders that the CRO position is vacant after 60 days. I think this is common sense. I would hope it's pretty bipartisan, certainly was a whole, and I would urge my colleagues to support. Yield back.
Gentleman from Illinois yields back. Is there further debate? The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes to strike the last word.
I strike the last word. I thank my friend from Illinois. I genuinely do for raising this issue because I think all members of this committee and the American people had a jaw-dropping experience after Silicon Valley Bank failed when we heard that the bank didn't have a chief risk officer for as long as it did before the failure. And I think this is one of the examples of the mismanagement of the bank. It's also underscores the supervisory failures here. And again, this gets at why we need more transparency from regulators, and that's why we have this bill before us. And so I would urge my friend from Illinois to reconsider his opposition to the underlying legislation, given the fact that we don't have as much visibility into the regulators and what they're doing all the time, and the fact that they did not, as the gentleman acknowledges, did not take action on the vacancy, I think underscores the need for more regulator transparency. On the issue, on the merits of the bill itself, I'm open to a conversation with the gentleman about this idea for the very reasons I just outlined. Again, I don't think this bill is the right place for making these changes because the bill is focused on transparency. But I invite the dialogue with him because I think he makes some very good points about why we had a vacancy for this long. One counterpoint to consider here, and as I recall Mr. Becker's testimony in this room, he indicated that it was the rapid growth of the institution that precipitated the regulators to, in fact, prompt bank management to make the change. In other words, they didn't have confidence in the chief risk officer that they did have in place, so they removed that chief risk officer, but that they didn't fill that position for very long because the search was taking too long. So it was actually the regulators themselves that precipitated the vacancy, and then the search was a long search. I'm not defending Mr. Becker's or the management's decision-making here, but they said because the bank was growing so rapidly, they had trouble finding the talent that could take on those responsibilities.
That's true. It's not a big move, only 2 weeks.
Explanation necessarily.
Maximize value.
But the regulators seemed to prompt the change, and then the regulators didn't take action when there was a delay in the replacement, and bank management is making the excuse that we couldn't find the talent.
Wait, what happens in 3 hours? First showcase in 600 days?
We need to evaluate what is the
What are you talking about, Bourbon?
response to make sure we don't have this protracted vacancy in a chief risk officer.
Does it say maximize value for shareholders? I didn't read it,
I
actually.
think we need to be deliberative about how we deal with a situation like this, especially in a rapidly growing bank, and make sure that they're not just filling the position.
I'm about taking profits here on arrival. Just don't know if I want to be trying to
apparently that was the reason
get back in it. Probably have some resistance here. It's looking like high from yesterday.
Banks would be incented to just fill the position with someone who's not qualified.
I kind of just want to swing trade it, though.
I will.
So, you know, I appreciate you said this bill is about transparency. There's not a lot more transparent than making sure you have a risk officer and disclosing that to the public.
See, it's still not back up to its level after a reverse split, which is also resistance, which is also that gap. So,
if any of us
I think if they offered shares, hopefully they would at least wait until they got back to that level.
But you don't have someone in your manufacturing shop who can actually build to the order. We'd say, well, put the brakes on. You can't actually grow until you have the ability to execute. What this is doing is saying, if you are growing at a rate that you are outgrowing the resources.
But if you are trying to day trade it, this would probably be where I take profits.
Go get a new person, but you can't continue to grow.
And then
the ability of your staff
maybe getting back in at
until you have those
$4
folks in
if
place.
it holds there.
2 weeks, 6 months, 2 years to find that person. Let's not expose to systemic risk. And I would urge to include in this bill because I don't want to be here 2 months from now facing the same problem where we said we knew what the problem was, we identified it, we had
As the value of the debtors' estates.
I'll
For the benefit of
reclaim
all
my time to
stakeholders.
say, I appreciate the gentleman's points that he's making, and I commit to working with the gentleman and deliberating about what is the right response to this. And I take the gentleman's point about transparency to investors not being aware that this institution had a chief risk officer for 8 months, because I share the concern that this institution didn't have a chief risk officer for 6, but there are interests to be balanced here. And what we don't want as an unintended consequence of the gentleman's amendment is a rapidly growing bank filling a position of a critical position of a chief risk officer with someone who's not qualified just because of the gentleman's requirement. I yield.
Gentleman's time has expired. Further debate? Gentlewoman from California, the ranking member of the full committee, Mrs. Waters, recognized to strike the last word, 5 minutes.
I move to strike the last word. I support Representative Caston's important amendment.
Yeah, there's some taking
which would
profits on
require
arrival
large
there.
banks to immediately notify their federal regulator when the chief risk officer position becomes vacant, and to provide a plan to the regulator about how it intends to fill the position. This is very clean. This is very simple. It is something that both sides of the aisle have talked about, and we recognize that that was chief failure on the part of Silicon Valley Bank. As it has been explained by Mr. Caston, No decent business, let alone
FINRA info comes out today.
should be without understanding its risk and have that position filled so that they would not be in the
Blue Apron up
situation
6.5.
that Silicon Bank found itself. Now, it's one thing
Didn't get
for
squeezy.
Mr. Barr
Chart
to
looks pretty
say
good too.
he will talk with Mr. Caston. Mr. Caston doesn't need any talking to. He's got a bill.
I like that.
He's got the bill to deal with what happens when you don't have a risk officer. Mr. Barr said, and I'll work with you down the road here somewhere. He doesn't need that. I tell you what's unfolding here today. What's unfolding is we, on this side of the aisle, know what has gone on with these bank failures. We,
Which is,
in talking
I've
with the
seen that
opposite side of
speculation.
the aisle, have agreed of what happened with the failure of these banks. There is no good reason why Mr. Barr would be opposed to this very straightforward, simple legislation. No, I will not yield at this point. I'm on a roll. And so,
Did she just
what is
deny yielding back her
unfolding here
time?
today is we are responding. We are dealing with those issues. We are saying
Eat
we
well
are
when it's
not
$400 to
going
$500
allow
a share.
this country to experience these bank failures.
That's crazy to
when
think
we know
about.
what has gone wrong. We have the management
I
at the
won't
banks
think about
who have
that.
accepted
I
responsibility.
won't open the
We have
calculator.
regulators
I won't
who have
add that
accepted
up.
responsibility. There's no reason why
That's
a
the kind of
bill
stuff that
as
makes you never
clearly
sell for profits.
written as Mr. Caston has
And pattern
represented
for
here
massive gains.
should not be supported, and particularly when it simply identifies a chief risk officer.
Nope.
This amendment
Bourbon.
also creates consequences for a bank that fails to
Diamond
hire
hands are for the
a
long
new
term,
CRO within 60 days
not for trading.
of the initial vacancy, specifically subjecting that bank to a cap on further asset growth until that critical position is filled. This
50
is
billion.
clear. As a matter of fact, you
Well, that's
mentioned
if you know
that
what the float
Silicon
is.
Valley
That with the
grew
450,
too fast.
465 million float.
And that was one of the problems. Now we're talking about, no, we're not going to
Excuse me.
allow you to continue to grow fast. We're going to put a cap on your asset growth until you get this chief officer in. No, I got to finish this. I please do. And so here we not only identify what is wrong and what should never exist in a bank the way it has existed in Silicon Valley Bank, but we're also going to penalize you in a way that you get it. I don't care how popular you are, bank. I don't care how you're the go-to bank for,
She was gonna say
these
goat.
small
How you're the goat
businesses
bank.
that need funds, need loans, etc. We won't let you grow your assets unless you fill this position. One of the concerns we heard from members on both sides of the aisle last week when the CEO of Silicon Valley Bank was before our committee was that Silicon Valley Bank did not have a CRO for several months in the lead up to the bank's failure. It is unbelievable that a large financial institution can remain operating in safe and sound manner without a CRO for an extended period of time. I've also heard shared concerns from members on both sides of the aisle that regulators were not escalating penalties as part of their supervisory process. So this amendment would ensure penalties would automatically take effect when there's a vacancy for the chief risk officer position. We also know how dangerous the rapid growth that these banks experience contributed to their failure. So I don't know how you get away with this one. It's too clear.
The gentleman
Considering
has expired.
taking my profits if we retest the high there.
Gentleman yields back. I recognize
Not
the
sure
gentleman
yet,
from
though.
Missouri, Mr. Lucas, will strike the last word for 5 minutes.
Move strike last word. This bill
Maybe
is
wise.
interesting in that it
I don't know. It's actually
trying to
consolidating
address
up here,
the
which is nice.
situation in this individual bank here, across the board to everybody. Don't disagree with that concept to a point. I think if we were listening to Mr. Becker indicated that he had a risk committee that the risk officer was over. So we had a committee in place, and we just didn't, the officer was not replaced. I think this bill, if you want to improve it, would request or require banks, once they hit 100 million or whatever, 50 million or whatever figure you chose here, to have a risk committee so that when the chief risk officer is replaced, retires, quits, whatever, that the committee is in place to then be able to take care of that situation, and somebody is there to be appointed as the acting risk officer until one is hired or this individual is promoted and hired in the full capacity. I think, I don't know if I was the only one that heard it, but I was listening to Mr. Becker very carefully the other day, and he indicated that they did have a committee and that the risk officer was in charge of that committee. So I think that there's a way to improve this bill. If you want to put in place or require, most banks already have this risk committee in place, but if require them to do that, that would be a way I think you could improve it. But I'll yield the balance of my time to
I finally found the
Mr. Barr.
Well,
the pump that I need for my dishwasher.
As a former
I found the
banker,
leak.
as a former bank regulator, a question based on your
All right,
expertise.
SPY, new low there.
Does it concern you that the regulator itself, the San Francisco Federal Reserve itself, prompted the decision of bank management to make a change? Maybe that was appropriate, but then not having the wherewithal in the succeeding 8-9 months to be on top of the fact that they precipitated the removal of the chief risk officer and took no action to make sure that there was a prompt but also proper hiring of a replacement risk officer with talent that could take care of
410, SPY breaking down.
rapidly growing size. I mean, what culpability does the
I'm going to take this short here for
One of the things that a regulator always looks at
retest
is
if it's a
succession plans,
false breakout.
succession for the management up top as well as all the way down the line. And I would have hoped that this regulator who requested that this risk officer be replaced or somebody else be hired in his place would have understood that there had to have been in place a succession plan to allow for somebody capable and qualified to take that position before requesting him to be removed. Again, this points to the ineptness of the regulators, of the San Francisco Fed, and all the folks who were involved in this, from the standpoint that they didn't have a succession plan in place for somebody in the risk committee to be able to take over this position. Management didn't see that it was worthwhile, and the regulator to request this without having a competent person and ready to go is remiss in his duties as well. If they were going to request the management of the CEO of this bank to be replaced, they should have always had in place a succession team, and that is one of the things that the regulators look for. Is a succession team, is there somebody ready to take over should something tragic happen or somebody change jobs or retire, whatever. So I think the regulators in this situation, again, dropped the ball across the board on this thing. This is just another instance of why I think they dropped the ball. And with that,
Will the gentleman yield?
yeah, I'll be glad to yield to the chair.
Thank you. I yield to Mr. Caston. Mr. Caston, they're saying this is a regulator's fault. Can you respond to that?
So I guess I want to respond to a couple things here. Mr. Barr, you mentioned that we needed to think about some of the ancillary effects, and you talked about what Mr. Becker said, and I agree. Mr. Becker did say that he had a risk committee. He also said that he had no knowledge of interest rate risk prior to early 2023. If you'll pardon my French, that is a crappy risk committee.
That's why you have a committee.
I'm in there short.
But I would, but
See if it
further,
pulls up a
you need
little
to
bit
have
more.
a desk where the buck stops. And the buck was not stopping there. They did not have a good risk committee. Let's talk about the ancillary impacts of who benefited from the lack of that risk committee. Because Mr. Becker apparently didn't think it was necessary to disclose to the public.
40907 is kind of my next resistance or next support.
Green from Texas, Mr. Chairman.
Let's see here though.
Green from Texas. Green from Texas.
Is that okay? Gentleman from Texas, Mr. Green's recognized for 5 minutes to strike the last word.
I strike the last word and yield to Mr. Caston.
Somewhere in that range.
Thank you, Mr. Green. To finish the point, let's just talk about the ancillary impacts. Mr. Becker had a risk committee, did not see that it was necessary to disclose to his investors that he didn't have a fully functioning risk officer or a risk committee. Had he disclosed that, perhaps the equity price would have fallen. Perhaps that would have hurt Mr. Becker, who sold $3.4 million of equity shortly before the bank went down. That would have been an ancillary impact. Perhaps depositors might have been concerned as this bank was growing through those 8 months from 2022 and not have as many uninsured deposits at the bank that we all as taxpayers had to step in with the Fed and find some way to protect against that. Perhaps all the equity holders who got completely wiped out when the Fed stepped in to protect depositors but not protect equity, maybe they would have been protected in the same way the captain of that ship got a $3.4 million lifeboat and let everybody go down. I agree, there would have been some ancillary impacts if we required them to have a risk officer, required them to disclose to public, and required them to be transparent. And I think we should demand those ancillary impacts in our job to protect markets.
Nice to see a rival consolidating up here. That's legit.
Thank you. I yield back to Mr. Green.
Gentleman yields back to Mr. Green. Mr. Green yields back, or you?
I yield back.
Mr. Green yields back. Recognize the gentleman from Texas, Mr. Williams, for 5 minutes to strike the last word.
Thank you, Mr. Chairman. I yield my time to Congressman Barr.
Well, I appreciate the gentleman from yielding. I don't have much more to say. I think we've beaten the proverbial dead horse on this. Just maybe it bears repeating that the testimony that we heard in this committee was that the regulator prompted the vacancy. The regulator was aware of the vacancy, whether it was disclosed to investors or not. And the regulator didn't take any action when the vacancy lingered. So to completely exonerate the San Francisco Fed here, I think is missing the point. I think we all recognize that an institution that's rapidly growing, that is of a large enough size and sophistication, needs a chief risk officer. But to just simply put a mechanical rule into place that might prompt a bank to comply with the mechanical rule and fill it with an unqualified person and not recognize the bank examiner's failure to take action to make sure that not only is there someone there besides maybe a committee that's not doing their job, but someone there who
Judge just signed the order
have
expediting
that
the
buck
request for
stop
lease
with
termination.
I think
What does that mean?
points to, once again, why the regulators need
What's up,
greater
my pump?
oversight and more transparency, which is why we shouldn't rush into this mechanical amendment. And
There is a
instead
meme stock
pass the
ETF. It's called
underlying
meme, I
bill.
think.
And I yield.
The ticker.
Mr. Williams, Mr. Barr yields back to Mr. Williams. Mr. Williams, you yield.
Yeah, I mean, it depends on what technical
Gentleman from Texas
indicators
yields
you
back.
look at.
Recognize the gentleman from Illinois,
Yeah, that one
Dr.
flipping
Foster,
green.
for 5 minutes to strike the last word.
There's been one.
I'd like to point out just
There's been a few times where it's flipped green and it hasn't led to anything significant. I think it flipped green here. But yeah, as we continue to build, it's much stronger. Yeah, I mean, it's significant. We're in a strong uptrend. Like we have been since we've been on OTC. Had a crazy rally, consolidated for a bit, made a cup. Well, really made the cup back here. Sorry, cup handle. And we're breaking out of that handle now. Oh, you can look at whatever sort of yeah you want. It's pretty bullish. His cup handle. We're moving up, breaking out of that. So bullish. RSI is only 49 on the daily. It's crazy. We have a gap fill up there, which it'll want to suck up to. Fill that gap.
Put into everyone's thinking the possibility of accrediting,
And maybe,
not only the chief risk officer.
yeah, we might not stop there. We might get a push when it rallies there. But again, we haven't seen him make a big move for the on OTC yet, so not sure how that's going to play out. Like a 50% move or something.
Thank you. Yield back.
I guess we've seen like 30.
Recognize myself for 5 minutes to strike the last word. Couple of comments. We're talking about the vacancy in this chief risk officer, which was clearly one of the many management errors in the case of Silicon Valley Bank.
Bolting candle on the
But
5-minute there for
As we heard in our
arrival.
first testimony, when Michael Barr, Vice Chairman of the Fed, in questioning here before this committee, I asked him, when did you get confirmed?
Oh, even
in your
RSI
job?
divergence there too.
He told us. And then I asked him, well, who had your designated responsibility on behalf of the Fed before you were confirmed? And the answer was he couldn't, and he's never responded to me in writing. Here's my point. Dodd-Frank designated a vice chairman of the Fed for supervision to have this overarching.
I think we get a push above this high though,
oversee the supervisors
and
in
make a
these
bigger
district
RSI
banks.
divergence potentially.
And it was vacant for 1 year. The whole time this was going on, that job
High
was
just still
vacant.
melting down.
And more importantly, I think, the Fed didn't designate, well, Governor so-and-so is the acting vice chairman of supervision. So I think, to me, that's a real failure in either how Dodd-Frank was structured or how the Fed's internal procedures work on that job. So speaking of people who were vacant, we didn't have in the federal government a vice chair for supervision during this basically most important period. Second comment, leadership on investigating Silicon Valley's signature and what to do about this has been, I think, from the top with our ranking member Maxine Waters and our chair Patrick McHenry. And on these particular solutions that are being proposed as amendments, to some degree, I think many of them are premature. And let me say why, ranking member. And that's because of your letter signed with Patrick McHenry on March 17th to the GAO, asking them to assess
This looks like it's doing its own little cup.
of supervision, accounting, treatment, and the like, and what they contributed, to this collapse. Some of the topics we're talking about today. And so when we get that report to you and Chairman McHenry, I think it will put in perspective many of the topics.
Katie's even building a big cup here.
And I'd ask to insert in the record the letter from McHenry Waters dated March 17th, 2023.
Katie's building a cup. I want to take profits here because
United States General
give us a retrace.
Office. Without objection, it will
3 or so, 3 1/4.
included, and I yield back. May I yield time to the gentleman, Mr. Muser? Then I yield back. Is further debate. I recognize the gentleman from Pennsylvania for 5 minutes to strike the last word.
Thanks, Mr. Chairman. I just want to offer a couple
Barbecue
of
edging up
comments,
still.
And that is that clearly there should have been a risk officer, perhaps a team of them, or maybe one smart one that was doing their job. The CEO, his entire staff are certainly all culpable here, but they're all gone.
SQQ, yeah, you could
And
do
the
SQQ
bank is
calls.
gone.
I mean, you're
The
probably
bank
going to see
lawyers
volatility
are
at
still
2,
there. No one's
even
gonna
leading up to
turn
2.
their
So
I don't even
it's
think
just all about
anybody's
entry and
necessarily
exit.
chastised. The stock losses are
So yeah, today would be a good day for calls, probably,
regulators,
since we're
all
down so much.
regulators in this situation should operate as
That
if
gap could very
all
easily get filled today.
managed. That's the role of a regulator. So, and on top of that, why don't we interview the HR managers, the risk managers, the compliance managers, the presidents? Why don't we interview all of them? Have oversight on all that microness of businesses in general. Or we perform our oversight on the regulators, which is what our jurisdiction is. I yield back, Mr. Chairman.
Gentleman yields back. Is there any further debate? If not, does the gentleman from Ohio, Mr. Davidson, withdraw the point of order on this bill?
I do.
If not now, the question occurs on the amendment offered by the gentleman from Illinois, Mr. Caston. All those in favor of the amendment shall signify by saying aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. A recorded vote has been requested. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hands, a recorded vote is ordered. Pursuant to Rule 3C5 of the committee rules, a vote on this question is postponed. For what purpose does the gentleman from California, Mr. Sherman, seek recognition?
I have an amendment at the desk.
We will pause and let that amendment be distributed. Gentleman from Ohio?
Sorry, out of sequence. Mr. Chairman, I'd like to reserve a point of order.
Say point of order.
Morning, Tasty. Bongo Cat and Space. Lakes, is it super full, overflowing? And
The clerk will report the amendment.
prediction.
To the amendment in the nature
I don't have
of
predictions.
HR
Volatility up and down.
Without objection, the amendment's considered read, and with the gentleman from California is now recognized for 5 minutes to discuss his amendment.
But
And thank you, Mr.
yeah.
Chairman. I won't be requesting a recorded vote on this, although other members are free to do so. And I didn't request a recorded vote on my last amendment because I feel a little guilty taking up as much time as I have, with this being the second of my 3 amendments to this bill.
I just retesting that
The
support.
regulators are allowed in some cases and required in others to do stress tests.
Early on my short.
And for year after year, their stress tests have focused on credit risk and have ignored interest rate risk. There are 2 risks that you have when you make a loan. One is that the borrower
July, yeah, I
will
heard
pay
that.
back
That's crazy.
on
They're
time.
gonna stay open longer than the
And that's
like
well
A Basin and
understood.
Loveland in
That's what
Colorado.
everybody thinks is the risk
Which
to
are usually
watch
open
out
till
for. But there
July-ish.
is an equally important risk, one that doomed 3 banks recently, and that is the interest rate risk. The borrower will pay you back on time, but at
I'm not using
due
Linux,
to a
no.
low interest rate.
Gnome-like behavior.
And by the time the
The heck?
loan, the bond matures, you may be in a high interest rate environment.
I can't buy shares on
So
Webull.
if you're locked in,
I've never
to
been able
a
to buy shares on
2%
barbecue.
bond that you're going to own for
On
another
Webull.
20 years, or and this is unusual, but a business loan of 20 years that's locked in at the same interest rate, at
7.25% on barbecue,
and your
25.85.
depositors
Rival's
start
still
insisting
consolidating
on
up
a 4% or
above that $4
5%
level,
return
so
on
that
their
looks good.
deposits, you have a loss
Me 23.20.
money just as much as if you had a portfolio of loans to Main Street businesses and some of them weren't paying you back.
Snow's still good.
So what this
Really?
bill
Must
requires
have been
is
cold
if
enough, I
you're
guess.
going to do a stress test, you don't just do the stress test for credit risk or for recession, because of course during a recession you have a higher credit risk because more
You know
of
me
your
when it's top
borrowers
left, it's
can't
like
pay
hitting
you back.
Alt tab in Windows.
But in addition to stress
Oh,
testing for
I don't have
recession,
that.
you also stress test for interest rates going up or down.
I don't like
And,
all those little cues. Windows gives you those too.
I
Like
think it's basic if you're going to decide to do a stress test that you look at both of these 2 risks. This bill would require that. You can say that the regulators should have picked interest rate risk as something to do a stress test for. Under the 2018 bill, we're now down to having I believe only 2 or 3 stress tests. This one says that in addition to those, you do one for interest rates going up and interest rates going down. And I regard it as a moral failing not to take my full 5 minutes, but I've said everything that should be said, so I yield back.
Would you yield?
I yield.
That way we can burn time together. Oh, good. I think you raise a good point, but I would make a couple of comments. One, every bank is required, no matter what size, whether it's a $31 million bank down in Bearden, Arkansas, or JP Morgan Chase, has an obligation to continuously monitor interest rate risk. It's one of the CAMEL's ratings. They added an S back in the 2000s, and the S stands for sensitivity for risk. And in that, you pay for
Rivals below the 9 moving.
quarterly
Bearish
report of
MACD, but
mark-to-market
price
all
actions look
assets and
very strong
liabilities
still.
And look at a range of interest
Up
rate
support.
sensitivity.
5's moving up
Down
here.
300 basis points, up 300 basis points. And that is at the heart of every board minutes, in that issue. So in the idea of stress testing, I think that's embedded. I'm real curious that you think that from the material you've studied, it's not. So
No,
I'm
the stress
asking my
tests
question.
that the regulators have done the last several years have been to look at the stress of a recession in the country.
If it's a
which
false
is
break to the
basically
downside or
credit
not.
rate risk, and they did not do stress testing. I don't know what banks do voluntarily, internally, but this would require the regulators, when they're overseeing a stress test, to stress test for interest rate increases and even interest rate decreases.
I yield back to the gentleman. Gentleman, and the gentleman yields back. Is there further debate? The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Move to strike the last word. I appreciate the gentleman's amendment, the author of the amendment, because, in the spirit of his amendment, because it correctly points out that credit risk isn't the only risk, and that interest rate risk was missed here. Once again, highlighting the need for the underlying legislation, more transparency and accountability for the regulators who missed it. There's other risks that the author of the amendment doesn't mention. Operational risk. There are disparities
Oh, there you
in
go.
the manner in which banks of the same size operate differently.
False break to the downside.
Credit risk is part of that. Interest rate is part of that. There are other risks that the regulators should be monitoring.
Also another divergence
But
on the
I am
RSI. Third one.
concerned
Wow.
that being overly prescriptive in the elements of a stress test could actually continue to create the problem that we had with the regulators in the instance of these bank failures. When Congress is prescriptive and asks the bank regulators to conform to a template, we're actually missing the whole
Barbecue
point,
2552 up
while
5.8%.
Dodd-Frank granted the authority to regulators to set the parameters of stress tests, the idea was to ensure that those stress tests are forward-looking and not just fighting the last battle. So my legislation allows the regulators to retain their authority to set stress test scenarios based on both current and future economic conditions. It also, though, ensures that Congress remains informed of their activities. And I think the big problem here is that Congress has not been informed of their activities, and had we been informed, we might have greater visibility in the fact that these stress tests were not monitoring interest rate sensitivity. So we're seeking transparency and accountability in this legislation for what's done. We're not seeking to micromanage or direct all elements of what the regulators need to be done, but the author of the legislation is right, that the regulators missed it, and that they were focused on, maybe excessively focused on credit risk, and not honing in on interest rate risk. But
Will the gentleman yield?
yeah, I will.
Will the gentleman yield?
Just a minute. But just to conclude, my point is,
Hey, trader.
we're not trying to be overly prescriptive.
Afternoon.
We're trying to make sure that the regulators are not directed by Congress into the last battle. We want them to be future and forward-looking as well. And I yield to the author.
This is not the Internal Revenue Code. This is a one-page amendment. It does not overly prescribe. It gives the regulators tremendous leeway.
On E-Trade?
It simply says you don't just look at adverse economic conditions, aka recession. You also look at interest rate changes, exactly how they do
yeah,
that.
it's messed up
they're
on mine
free to
also.
determine, and it does not.
There's a huge wick up there to
prevent us
$2.50.
looking at what
That
might
is neat.
be some other adverse circumstance.
Your transactions up there?
To the stress tests, it does subtracts.
You have a time and
nothing.
sales on your E-Trade? I don't know
So
where
it's
mine
not
is even.
overly
I never look at
prescriptive.
E-Trade.
It doesn't focus
The charts really.
our attention on just interest rate risk to the exclusion of something else.
Yeah, I'm showing the same thing.
And I hope to have the gentleman's support.
I'll reclaim my time
Do
and
five.
just conclude really quickly that it didn't take Dodd-Frank.
Yeah, $2.50 for a high
have
wick.
regulators be sensitive and mindful of interest rate risk. Interest rate risk has been around in the business of banking for a long, long time. And before Dodd-Frank and before
1235, let's see if we can find it on here.
and before this saga of Silicon Valley Bank, interest rate risk was a basic
I don't see it on
job
here
of
at all.
bank management and bank supervision.
It was just
So,
a error.
the idea that we have to prescriptively ask bank
A
regulators
little,
to do this.
just a little foresight.
It just seems to me not necessary. I yield.
Gentleman from Kentucky yields back. Is there further debate?
Go straight up to hearing that. You guys want to see it?
Does the gentleman from,
Doesn't look like anything but a line.
gentleman from Ohio withdraws the point of order. If not, the question now occurs.
So yeah, there you go,
Offered
2.5.
by the gentleman from California, Mr. Sherman. All those in favor shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. In the opinion of the chair, the nays have it.
I know, but
For what purpose does the gentleman from California seek recognition?
I rise to say that I will not be introducing the Third Amendment since it is a third attempt to focus regulatory action on interest rate risk, and I've already had two of those, and I realize that the hour is late. I yield back.
I thank the gentleman from California and thank his keen interest and good discussion on interest rate sensitivity.
A little head and shoulders here, maybe.
Or is there, gentlemen, further debate? Is there a further amendment?
It's Green from Texas, Mr. Chairman.
Mr. Green from Texas, you have an amendment, Mr. Green?
I have an amendment at the desk.
Mr. Green has an amendment at the desk. If you'll
Mr. Chairman,
pause, we'll
I
let the
reserve-
clerk report the amendment. And
Chairman, I reserve a point of order.
And Mr. Davidson from Ohio reserves a point of order.
Put some yes for nap time. Greatest news all day. Yeah, we can put a break to that. Rival 4-1 up 15%. Barbecue 6.5. Barbecue breakout 12:48. 1 p.m. margin calls maybe coming. Hungarian Prime Minister Viktor Orban has said that Ukraine can't win the war against Russia. First Citizen lays off almost 500 Silicon Valley Bank employees. Google Trends has reported that searches for how to make friends, where to make friends, and where to meet people has reached an all-time high. I looked at this the other day, I think. Different. The Congressional Budget Office has projected that annual deficits will reach 2.7 trillion in 2033, 6.9% of GDP. Bill Gates said he wishes his younger self knew there was more to life than work. I'm moving up a bit. Two, 5, 8, 8. Long big tech, short banks, and short US dollar were the most crowded trades in May. We've got FOMC in 1 hour. Thanks guys for your likes. 41 likes on the day. Pretty good. I don't know how long I've been muted. Yeah. I think we could see 30 cents on barbecue tonight. So. Like an inverse head and shoulders here on SPY. Get my boat out there. 4110 on arrival. Are you still on vacation, Dink? Jeez, man. Starting to think you live at the beach now.
Abercrombie and Fitch remaining a really bright spot throughout retail earnings. Last but not least, a not so bright spot in retail earnings is Petco today, hitting an all-time low after its first quarter results.
Yeah, tons to get through. A lot of the same names that we, of course, previewed yesterday. We're now getting a chance to look
Barbecue
at
just melting up.
now today, from Petco to, of course, a couple of those apparel retailers and Abercrombie, as well as Urban Outfitters. So looking forward to that in the second half of the show. We got tons to get through on the earnings preview front here as well. Up vote, down vote, tons of big names, lots of different industries and things that we're looking at here. Let's start with the big one. NVIDIA, of course, not endorsements, not recommendations. We looked at this one yesterday, I believe on FOMO. And hey, this is the story of the week from a micro perspective. Jenny, we got NVIDIA earnings. This is like the AI mascot right now.
And so I really focus on all things valuation for NVIDIA ahead of its earnings, because I do think it's something we've talked about, we talk about almost every single day. The way shares are up 105% now on the year, up 85.5% over the last 12 months, and up 177% from their low. Now, since hitting their low back on October of 2022 of 108 a share, the stock has almost tripled. So that means that a $250 billion company has turned into a $750 billion company in just 7 months. I mean, that's outstanding. expanding. Granted, its peak was nearing a $1 trillion market cap for NVIDIA, so all things considered, but we do know that now ahead of this report, it does feel like the street is expecting even beyond perfection from NVIDIA. They're expecting earnings of around 91 cents per share on revenue of about $6.5 billion. Given its history, though, NVIDIA has a really solid history of reporting better than expected earnings and as well as sales. So I do think that is something to consider here. This company typically does knock it out of the park. But again, valuation to me a little bit concerning here. Say NVIDIA does better its revenue by about 10%. Its highest in the last 4 years has been about 7%. That's about $7.15 billion per quarter here, Alex, and they need $7.5 billion on average a quarter to reach their $30 billion revenue estimate for fiscal 2024. So right now, we have to see some really stellar growth for NVIDIA to hit that $30 billion target. I mean, that to me gives me some pause here. In short, they have to put up some pretty big numbers when they report today. And so we are seeing shares down about 2%, but big expectations for NVIDIA.
Yeah, I actually previewed this one with Oliver Rennick this morning on Morning Trade Live. A couple things that stuck out to me were just how bad this quarter is actually expected to be. 20% revenue decline if it just comes in line with estimates, and 30-some percent decline if it's going to hit EPS. Yet the stock has done nothing but surge. It's only about 10% off its all-time high. And if you look at those valuation metrics, something like a forward PE, and kind of look at that versus historical average, it is so far and away above where it's normally valued. And so much of this, the only answer is the hype around AI. And so when I looked at this particular report, as long as they kind of deliver what the expectations are, maybe best it by a little bit, I think the movement's going to come from the AI conversation. It's going to come from the guidance conversation. It's going to be the talking about the future, because nothing else adds up. It's going to have to be this positive message. It's going to have to be this huge story about the work they're doing to help supply these big companies with chips for artificial intelligence R&D, because that's the only difference from where we were in the last 5 years to where we are today. But we did talk about this one in depth yesterday, so I'm going to say down vote today.
And we're also going to need management to have a really strong conviction, because any sort of hesitation, I think, will be read through as some skepticism into their push in AI. And we also don't want that, of course, with so much hanging on AI now, like you said, Alex, for the future of this company. But our next name today is Snowflake. Snowflake also outperforming on the year, up about 22%, 35% higher over the last 12 months. Earnings are pegged now about 5 cents per share on an adjusted basis, which would be lower than a year ago on revenue of about $609 million, which would be up from the same period they reported a year ago. Now, the financial services sector is one of the largest industries for Snowflake, and there have obviously been some jitters associated with the recent pressure we've seen on a lot of the financial names. Now, they've also seen resilience, though, in their consumption-based business model. And this name, any mention of AI, I think would also be a bright spot for Snowflake, as they have been pushing more and more into artificial intelligence. Last quarter, they said they expect about 40% growth in their product revenue for their fiscal year. So durability in their guidance, I think, will also be closely watched by analysts. But of the analysts covering this name, there's about 43 right now. 29 have buy ratings, 12 have hold ratings, and 2 have sell ratings. And the average price target of $187 does imply about $11 of upside from where we're currently trading. The share's up about 0.5% now on the day.
Yeah, not one that we talk about a ton, Jenny, but I think it's an important name. It's obviously a high-flying type of a name, tons of volatility in this one. Going to say upvote. Obviously, earnings are going to be a great opportunity for some of that volatility. You mentioned, $15 move on this one for a $175 stock. It's big percentage. So tons of volatility priced in. Should be a fun one, be it to the upside, to the downside. If it delivers on what the market is pricing in, this one will have some movement. So going to say upvote there. And on the other end of the spectrum, while it's not entirely immune to stock price volatility, not necessarily something that from a business standpoint I think of as totally volatile, Dollar Tree.
Dollar Tree, there were talks that these are supposed to be some of the more resilient names, just given that they serve that lower income consumer and they also keep their prices relatively low. I think the question for this name is all things Family Dollar, as this name has experienced just so much weakness associated with that brand ever since that acquisition. But for this quarter, this is actually the only name of the 4 that reports tomorrow morning. Revenue's pegged at about $7.2 billion, which would be an improvement of about 5% on a year-over-year basis. Well, earnings are forecasted to drop here about 36% from last year. Now, their first quarter performance is likely to have benefited from a lot of their efforts to really drive assortments as well as see consumable categories expand to their customers. They've made really strong restructuring efforts over the last year, like store openings as well as closing some of their less profitable stores and improving their distribution centers. They've really been on track to leverage that Family Dollar and Dollar Tree distribution center system, which combined with their merchandise is seen as a positive here to their top line. However, on their last earnings call, they did say they expect gross and operating margins to decline in the first half of this year, given the demand shift right now towards their lower margin goods. Now, I think it's important to note when looking at Family Dollar as well as Dollar Tree, the combined two companies have around 16,000 locations in the United States, which makes it just ever so slightly smaller than actually Dollar General. But this is such a massive company, and I think it's oftentimes forgotten, especially living in the city. You don't see these everywhere. This is one of the largest U.S. retailers by store footprint.
Yeah, it's typically same as Dollar General. They're kind of serving more rural communities as well. They're not necessarily associated with big urban super centers. So from a macro read through, I think there's a ton here. From a micro standpoint, though, it's very specific. So if you're tied into this space, if you're looking at sort of the staples, as well as sort of the consumables in this type of retail, I think that you're going to have, of course, have a potential treat, be it to the upside or the downside after we hear from this one tomorrow morning. But I'm going to say downvote because I think more in line with a theme that we sort of have building here. Obviously, we didn't say upvote to NVIDIA, but it's a big part of the conversation. The next one on the list here is more of a tech firm, and that's Splunk, and this is one that also has a reputation
Oh,
for
nice, Dink.
volatility.
Staycation.
It does, and I would say actually from a valuation standpoint, this name looks a
Yeah,
little bit more attractive
yeah, I bought.
here than
I've been
NVIDIA.
trading
They have
barbecue
managed to grow actually
pretty
their
actively,
cloud
so
revenue at a 40%
I had shares from yesterday, and I picked up more today.
able to keep their operating expenses
So
relatively
I'll look at
flat.
30 cents,
They're
maybe
expecting
take
free
some
cash flow
profits.
to nearly double this fiscal year, and they've completed now
but
their multi-year transition into
I haven't
a
seen big pullbacks yet,
subscription-first
so
business.
at 30 cents,
Adobe has seen a lot of success from that over the last several
take
years. Their stock
profits,
is
and then
now
look
sitting
for
at less than half of its
support where it
2020
finds support.
highs. So for that reason, you could say things are more reasonable at current
Might
levels.
be
They also are facing though some pretty
this
stiff
25
competition in this
cents or
more application and
23.
infrastructure space of technology. Some of those largest competitors being Datadog or New Relic. But I was actually reading with their annual revenue sitting at about $3.7 billion.
One more
they're
thumb up.
twice
Thanks,
as
Tree.
large
Yeah,
as their
you are.
next
Wow, look at that
closest
20%.
competitor, that being Datadog. So this is
Nice.
quietly a pretty sizable company in its respective
Crazy if this
space.
thing breaks out today.
12% for the year.
It's like
and
one
down
day
about
of consolidating
17% from their
keeps
high,
going.
and up almost 50% from their low. So while we have seen outperformance, it's not really quite the same degree of outperformance we've seen from a lot of these other tech names.
And way, way, way off its highs. I mean, this stock at one point was well over $225 a share. So
Rival
it's
coming
obviously
down
not
a little
been
bit.
completely immune to volatility over the years. It's had its valuation taken down as basically the entire market, particularly the non-profitable.
VWAP's at 3.952. Whoa, that was a flush.
Within that general group.
It
So I
was
think
like
it's going to be a fun one. Obviously, it's
SMX.
sort of in this
And
no
back
man's
up.
land. Well, it's like 50% off its lows, but it's well over 50% off of its all-time highs. So
Stop loss
trying to
hunting,
find,
maybe.
Are you going to continue this move higher? Are you going to build on the
See if
recent
we get a handle on this
successes
cup.
and kind of the oversold nature of the market? Or are you going to be one of the underperformers? I think we're in sort of that critical time period for a lot of these tech firms. But alongside Snowflake, I'll go ahead. I'll say upvote for Splunk. Two kind of fun names. Two ones that are a big part of the growth story, but maybe overshadowed by the Microsofts, the Apples, the Teslas of the world.
Yeah, two definitely tech and cloud heavy names. Two of, I will say, my least favorite company names from a stock and ticker standpoint here. But we'll be diving more into the charts as well as some example trades in both Snowflake as well as Splunk coming up next. Stick around. Next Gen Investing. We'll be right back.
Spreads on barbecue. Varies, of course. Let's see. 26.01 and 26.35. That's the spread right now. I was just chopping around. Gotta wait for FOMC, maybe get our move. Got 45 minutes for that. Yeah, I noticed that on the pre-market. I was looking at German. Huge spreads. Crazy. Arrival just below $4. UOP's 3952. See if we get some support of UOP. No share for 30 minutes long? How do you know? Market order? Arrival, don't do that. Well, I didn't want to put a stop loss on these illiquid stock, but I will. See. I didn't want to take profits here, but was it a market order, or how do you know there were no shares available? Oh my gosh, IP down 14 today? Ooh. Yeah, today would probably be a good day to. They're not gonna hold that. They're not gonna hold that
The
divvy.
ego on you.
They're gonna cut that probably. Thanks, Ace. Appreciate the gifted membership, man. Praise, praise, you're the lucky one. Got sniped. Thanks, Ace. Praise, you can come thank Papa Ace. $23.72. No eagles. There's no eagles in the chat, kitty. It's just a ridiculous notion. I see owls sometimes. Right now I'm seeing a kitty. No eagles though. Rival. Hold it. I know, trader, but what was the order? That's what matters if there's actual shares. Was it a market order or was it a limit order? Oh. Engulfing candle in the 5-minute on SPY there and a double bottom. Wait for, see if we get a pull back to 410. Grab a long market order. That's crazy. That was on the German market. Was that with like a pretty well-known brokerage? No way to wait for the pullback when you got that stuff going on. Alright, got engulfing on the 5. I think we'll see move up for FOMC, maybe up and down. It's 120, we've got about 40 minutes. Rival holding VWAP. I'm moving up to VWAP. Stop.
Walk us through an example trade that leans into that more neutral strategy.
Yeah, you know, Jenny, from my understanding, you're into running. You like that kind of, that's your choice of exercise, let's say. And, you know, one of the concepts in running is kind of pacing yourself, that concept of not overexerting yourself so then you have to take a break. Well, I kind of took away from Rick's presentation there that this is a stock that just didn't pace itself properly. It's losing its momentum at a pretty critical area. Doesn't mean things are bad, but on a technical standpoint, it's kind of just run out of some steam here. Maybe needs to take a little bit of break, regroup, and reassess. And so I kind of approached it with that in mind. Looking at this one just to kind of maintain its value, maybe not move too tremendously either way. He also provided some support and resistance levels around 89 and 103. We're looking at an iron condor just outside of those two levels. So what we're looking at here is selling the 88 104 strangle in this week's expiration, and then of course defining the risk, creating an iron condor by buying $3 wide wings below and above those short strikes. So 85 and 107. Dollar credit would be 1/3 the width of the strikes, $200 in risk to make $100 max profit. Break evens, simply subtract from the 88 put to get 87, add to the 104 call to get to 105. If you look at the risk profile here, what you'll notice, it's a pretty straightforward strategy. It's essentially taking the short put vertical, actually not even essentially, it is combining the short put vertical with the short call vertical. There's risk in both directions, but only risk in one direction at a time. Stock can only be in one place at a time. But there's a sweet spot here. Stay between those short strikes, and you can have the best of both worlds. Both these strategies hopefully working towards zero if they expire out of the money. So neutral because it needs it to stay within those short strikes. They're kind of acting as surrounding, kind of bounds for this one. But because of that, you can get a little bit further away. Because of that, you can actually have a still relatively high probability of success, even with risk in both directions. This is fading market volatility post-earnings, Jenny.
I liked the running analogy, Alex, and I can relate to Splunk's price activity because running out of steam is a really accurate way to describe my morning run today. So I can very much relate, but we'll be watching both of these names when they report, obviously, today after the closing bell, but also important to keep in mind for both of our example trades today. They do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO, so we are looking at all things Netflix as its password sharing crackdown has finally hit us U.S. users. Shares are up about 1.3%. We'll discuss that story more coming up next.
Afternoon, Jay from the Bay. Okay, 30 minutes to FOMC. Barbecue 25.90 up 7.4. Arrivals holding VWAP 3920 up 10%. Yeah, I think I'm gonna get stopped out on this. Dang it! I should have taken profits. I wasn't sure that was gonna be an actual resistance. I mean, it looked like it once it got there, but before it got there, I mean, that was, yeah. Oh well, I think it'll keep making this move. I do get out.
So Kevin, unfortunately, we were looking at a pretty sizable move lower today, and XPeng shares are down over 10%. Saw some headlines that signal a demand problem, so walk us through this story.
A significant demand problem here, Jenny. We are seeing the stock down about 10% because they missed both on the top and bottom lines when it came to earnings here. Revenue came in at $587.31 million. Versus the street's estimate of $712.67 million. That would be about a 50% decrease year over year. Adjusted earnings per share also came in at a loss of 37 cents versus the street's estimate of a loss of 33 cents. Gross margins contracted down to 1.7%. And if you want to see how bad the actual economy is, or when it comes to this particular company, its economic scale that it could have for EV vehicles, their vehicle margins were actually in the negative. So every car that they basically generated and sold, they actually lost money on it. They did deliver about 18,230 cars for the first quarter. It's down about 47%. They dropped their forecast for Q2 as well. Now they're expecting to have between 21,000 and 22,000 cars delivered in Q2. That would be another decline of 36.1% year over year. And you're just seeing a lot of this pressure here. There's a lot of competition within this space, especially in China. You have Li Auto, you have BYD, you have Tesla, among some other names, and we see the Tesla price cuts really eating into XPeng's ability to be able to maintain market share here. And they are launching another vehicle towards the latter half of this year. Let's see if that's going to be a way for them to try to regain a little bit of market share, try to change this momentum. But we can definitely see the competition in China is starting to heat up. And at this point in time, they're just not able to see their stock catch a little bit of a bid. I mean, it's down 10% today, and if you look at it on a longer term time frame, it's been down for the most part for the last year and a half. So it's just a difficult earnings report. Hopefully they see a better one in the next quarter, but their forecasts once again are looking pretty light. So the market's expectations are probably also going to be very low when it comes to this report next quarter.
Yeah, and Kevin, this name has really just established a whole new range this year. I mean, we've fallen and we're nowhere close to where we once were, but I think it's really important to differentiate these earnings reports because it doesn't seem like their sales flop here was industry-wide. I was actually reading for sales in China through April. They had come in about 30% higher on a year-over-year basis. So it's not that we're seeing weakness collectively, it's that this seems like a very XPeng-specific story. So then I guess, why are we seeing these EV sell-offs today? I guess the broader market is also lower, but we're seeing some major weakness today also in NIO, also Tesla, Li Auto actually the bright spot, but it's interesting to see these names trade as if this were an industry-wide problem.
Well, Jenny, I would say this is actually an industry-wide problem because they're had the ability to sell EVs at a faster clip. Yes, we are seeing growth in that area, but if you're selling more cars because you're cutting prices, that doesn't help out a lot of these automakers. That cuts their margins, and then they're unable to be profitable. And if you're not profitable, it's harder to find investors. If you can't find investors, you can't fund your operations. And so I think that's what we are seeing right now. It's a clash between BYD and Tesla. Those are the two main companies out in China that are gaining market share, and a lot of these other companies that are trying to break through this market. Yes, they saw a little bit of a windfall here over the last year and a half, especially 2 years ago when we had very low interest rates. But now we could see that there is a price war taking place, and the price war is on the cut side of the business here. Yes, that's creating a lot of individuals to be able to purchase cars out in China, and then that's also consolidating power. One thing to also note, China did cut its tax favorability for EV cars, I want to say a couple of months ago. So I think a lot of this data that we are seeing is probably, we won't see the full impact of those tax cuts. The end of the tax subsidies, that's the right way to say it. We probably won't see the full impact of that until another couple of months once it starts to get through that economy. But overall, prices going down should spark demand. It's just who's actually selling the cars. BYD has the better car when it comes to cost, and they actually can scale a lot better than Tesla at this point in time. Tesla's trying to get a little bit more aggressive, but some of these other names like Li Auto, XPeng, they just don't have the capability right now to try to match the prices as well as trying to match the output.
in terms of they're just such new players in this space, I also feel like there's a lack of, faith in their production figures because they're just relatively newcomers in the EV world that has become very, very competitive, like you pointed out. Really great breakdown on why we're seeing XPeng shares lower 10% today. Kevin Green, senior markets correspondent for the network. Now I'd like to bring back in Alex, and it's time for FOMO. And I'm really excited to talk about this, Alex, because we've only been discussing the Netflix US crackdown on password sharing for 6 months at this point. It has finally come here to the United States so everyone can quit their complaining on social media. It's here.
Yeah, I think it's an important step for Netflix. I think they've approached this relatively methodically as well. Not to go too far off track, but what it kind of reminds me of is when Meta, formerly known as Facebook, first initially bought Instagram, it knew it had a really popular service, but it didn't really have a way of monetizing it initially. And so it made slow, methodical steps integrating new ways that the feed sort of interacted. It wasn't just chronological, it was sort of curated, to embedding ads, to slowly integrating some shopping stories, the direct messaging. All of that slowly built up over time, slightly adjusting the experience that you had, but in time, drastically adjusting the experience that you had. So didn't disrupt you too much when the subtle updates were made, but it allowed for them then to really monetize a super popular platform. So Netflix, in the same way, announced some ad tier models and always sort of had this ace up its sleeve to basically just eliminate the sharing of accounts and get more people to subscribe. And so when it finally pulled that sort of, that trump card, if you will, that it had, it waited until it had tons and tons of different choices so that you were less likely to just quit altogether. But, if you couldn't afford the higher end, skip the ad model, you could spend a little bit more for a premium subscription, or you could go to a much more affordable ad embedded model that maybe had other restrictions involved, but there was choices. And I think that was really smart. And it also, of course, has been so telegraphed. You've had plenty of time to plan for this.
Yeah, I completely agree. And let's break down some of these choices now. So we do know that if you want to share outside of your home, you'll be paying $7.99 per month. That is about $1 more a month than the account that does have ads, which is $6.99 per month. But it's about $2 less per month than the basic Netflix account. They, like you said, Alex, they've been warning investors of this since early 2023. This is not new news, but they have estimated that they estimate more than 100 million Netflix users.
Bye, back to VWAP.
Their service with these
Barbecue.
This could
+7 still.
to its subscriber growth.
I will bounce in a little bit. Okay.
A viewer is watching the service with these household devices based on smartphones like iPads that are connected to the same internet network as their primary TV. The sharing changes do come with some limits, though, including how many extra members account owners can add. You can actually pay $15.49 per month to then have one account added, or if you pay the premium subscription, you can add 2 extra accounts outside of your household. But I think
looking at this
a lot
one?
of the flack that they've taken over the last several months has been they once tweeted out that love is sharing passwords. They're saying this has been a massive tone shift from Netflix, but I think everything has shifted. We're seeing
trend
more
there.
competitors in this space. Netflix is no longer the only streaming service you can get. Far from it, there are so many in this space. And I think why wouldn't they try to monetize here the 100 million people that are essentially obtaining their service for free? I think this to me makes perfect sense, especially just given the scrutiny Netflix faces with its subscriber growth on every earnings quarter. They have to put up really massive figures to then please the street and also be able to grow their top and bottom line. Now, they are sort of in the throw of 2 major shifts as a company. And of course, that is the password sharing crackdown as well as this relatively new advertising model. So naturally, we have seen some positive reaction, at least from analysts today. We saw Oppenheimer raise its price target on Netflix to $450 a share from $415 with an outperform rating, highlighting that they actually see right now, like you said, Alex, options are seen as a huge positive. Right now, if you don't want to pay that $7.99 per month to be added on, you can then pay $6.99 for the ad-supported tier. I mean, there's so many different ways right now you can obtain Netflix at a relatively low cost. And I think $6.99 per month, this is, so affordable given the fact that there are so many services right now that are costing upwards of $30, $40. I mean, costs have gotten more expensive as you add on to your different packages. So $6.99, I'm like, are people really freaking out about this?
look, money and everything is going to be different for everybody. I'm not even going to go there, but what I'm going to say is this isn't a charity. Like, at some point, this was always going to happen, good or bad. But it's also a story kind of as old as, kind of for-profit has been, which is get someone, interested in your product and then charge them for it. So how did you do that? Free trials are a big way that companies do this. Partnerships with other firms. You saw this with Disney Plus and Verizon. But what did even a company like Uber do? When you first, Uber kind of launched on the scene, it's far cheaper than it is now. So it gets more embedded in your everyday life.
I mean, they've already, they're just reiterating their written statement or whatever.
Done this over time.
So it shouldn't be anything new.
Netflix is a lot less than it is now. That's just the natural way that these things progress. Is the for-profit aspect of being a publicly traded company overtakes maybe the spirit of what it initially was, which is let's just get people interested in our content. So they still want to make content, they still want to have subscribers, they want to make money doing it. And so, as long as you can find something, that fits your budget, they've tried to accommodate that. I'm not going to say it's good or bad or that they're great choices. Again, it's for everybody to decide, but they've at least thought about this. They didn't just cut it off one day and say, pay for it or don't.
And I think they have the content to match now. I think there was a day when their Netflix originals were not very strong, but they have such a steep catalog right now of offerings. I mean, you could go on Netflix for hours and hours and hours. There's so much content now on Netflix, and it's all, I would say, just relatively improving, especially given some of the cash they've spent and put up to increase the content they offer. So I think all things positive for Netflix here. We are seeing shares up on a down day, which I think does signal the fact that the street likes this news. But trading this name, Alex, I mean, Netflix's chart is
double bottom played out on SPY. Freaking VWAP now.
Week low, an outperformer on the year. Despite some of the ongoing volatility, we do still see Netflix on the occasional day. This name moves.
No doubt, and stock price pretty expensive. A lot of annual subscriptions per share here for Netflix. But what I looked at here was buying a call condor. I think the optimism around this company is pretty clear. Obviously, the stock's doing better than the overall market here today, Jenny. It's had a nice recovery off of its lows. I saw some, analysts suggesting that you could see as much as 36 million new subscribers from this kind of crackdown on or password sharing. Those are big numbers. They're talking about a lot of potentially new people paying for this particular service. And so if you see that as a positive, you see that continuing. I looked at buying a call condor, which seeks to reduce the notional exposure in this name. It is a little bit more expensive per share stock, but also risk-defined, but also one that can make some money in the event that this thing does move higher. And so buying a $10 wide spread, the 360, 370, selling a $5 wide spread, the 405, 410. But notably, this goes out to July, so almost 60 calendar days away for the expiration. So there's time for this upside to actually come to fruition. $4 debit means $400 in risk. 364 is the break even. You find that by taking the biggest option associated with this trade, which is that at the money 360 call and adding that debit price to it, you get to 364. I think it's a kind of a fun risk profile. It performs best if it falls between the two short strikes. So between 370 and 405. That's a $35 wide window where this thing can expand to as much as a $600 profit, not accounting for transaction fees. If it does, however, overshoot and break through 410, you do give back 500 of that max possible profit before it does level off for still a $100 profit, even in the event that this thing just goes completely in the money and they go through assignment and exercise. So no upside risk theoretically, but you can give back some of that profit potential if it just takes off and charges through some of these levels we haven't seen in quite some time.
Yeah, I think that's really well put. And of course, we don't have any near-term earnings events for Netflix, so no near-term major catalysts in the company. But that does it for our FOMO segment. Now, coming up next, we will talk to monster movers on the day. That is Urban Outfitters up 16%, Abercrombie up over 26% with Caroline Woods. We'll discuss these massive moves to the upside coming up next.
SPY above VWAP. Barbecue moving up little bit. Rival hanging out at VWAP. See if we get an intraday cup and handle here on SPY. A bigger cup and handle. Or gap fill there at 414. Projection there on this SPY. Morning, DIY. Rival. That to me. Force me to day trade you next time. It is still hunting for the gap. Slowly but surely today.
Demos on how to think or swim, head to the education.
Being pretty flat on the day. SPY back to VWAP. We've got 10 minutes to FOMC. I've got some long contracts I'd like to stay in. Might get stopped out of.
A little shocked to see that no one asked them why didn't he respond. No one asked them why they did all those things. Like, no one asked, like, he's like, yeah, I'm really sorry it happened. It's all my fault. Then it's all your fault. Well, why are you paying yourself to do nothing other than
Target has removed Pride Month feature displays from dozens of stores in southern states. I just got stopped out on arrival. That's why you just take profits. Oh well. Avid Technology Inc. is working with Goldman Sachs Group Inc. to explore a sale. Yields on June 1 T-bills surge past 7%. The record. Alright, 8 minutes.
to 6 cents a share on earnings. Now, if you look at sales, again came in ahead of the estimates and did rise about 5% year over year, coming in around 1.56 billion. But if you go back last quarter, the company also guided lower for fiscal year 23. And if you look
Okay,
at
we have
this
7 minutes.
last report, they also did the same thing. So this is the second consecutive quarter in which they're actually slowly moving the goalpost down in terms of their expectations for earnings and sales. So prior to the release, the estimates for the remaining portion of 23 was 45 cents, but that's down from 77 cents last quarter. That's for the full year now, okay? And the range essentially now is between 40 and 48 cents. So they're widening out.
Yeah,
the
looks like
lower
barbecue
range,
might want to
and
break.
also for
The
sales.
upside.
Sales estimates were 6.25 billion, and they widened the range, unfortunately, on the lower end to 6.15 billion. So I think that's
Yeah, moving up 9.5%.
explanation to see the little bit
630.
outsized move that we're seeing in the company price today to the downside. But at the same time, what I think is going on is you're seeing gross margin compression. Gross margins actually fell about 250 basis points, and operating margins fell about 40% relative to last year. So to me, that suggests that, despite the high revenue numbers, that's to be expected because prices are rising. Comp sales were actually better than expected, 5.1% versus 1.2% estimate. But that's an easy number to make, especially with prices rising. But internally, it looks like to me they've got an efficiency problem because gross margins were down. That suggests, higher prices, but also higher expenses. But at the same time, operating margins are contracting. And I think that's, again, part and parcel of why the trend is down.
George, I was kind of looking through and trying to get an idea of sort of the types of things that did well, and it sounds like the grooming services, kind of things that are seen as sort of essential for the pet. Premium foods did pretty well, so again, sort of the staple aspect of pet food or pet kind of expenses did well. So to me, then the inherent part that didn't do as well is the more discretionary
Barbecue
stuff. Things
edging
like,
up here.
let's say toys or extra things.
9.7%.
That really start to boost the top and bottom line for some of these pet store companies. You go to the store to get the food, and then you buy that toy on the way out. That's really where they're making the money, is that pumped up average ticket size. And maybe we saw that a couple years ago in sort of the pet boom during COVID, but it sounds like that's the piece that's really lacking here. George, any thoughts on that?
Well, I think if you look at the services, which I think are still very robust for the company, you have to think about the human capital needs for services. More people, more workers, that's more expensive. I think at the end of the day, the discretionary component, I think there's validity to it, Alex. I think people are being more cautious on what they spend, maybe more so on their pets. But again, across the board, people are a little bit more fearful, so they're not going to buy that expensive product. And I will say this, lastly, if you look at the trend in the stock, it's been
2644, 9.7% on barbecue. Close to the high of this range, basically. Hour in the US is from 3 p.m. to 4 p.m., so that starts in 1 hour.
Because the debt on the balance sheet is about 3.1 billion. Now, compared to market cap, about 2.4. I've seen worse, but I've also seen better. And I think the interest expense on top of everything else is creating a problem for shareholders right now.
Yeah, and with that 15% move lower, it's easy to see why we're seeing some of the slowdown just in this name's growth here, George. I mean, it's difficult to feed yourself, let alone feeding your pets. Maybe people are also just buying less pets. That's another way of thinking there, but we will leave it there. Appreciate all the insight. George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the Watch List with Nicole Petalides.
Taking profits. Well, hopefully you guys listened to me and took profits. Could hear the greed in my voice. I said it. All right, 2 minutes. Said orders which affect the price in the full hours, right? I'm not sure what you mean, Jan. FOMC. 1 minute, 10 seconds. Barbecue 9.9%, 2649. Blue Apron up 9%. What we get 30 seconds. Wish my entry was lower on that double bottom. I'm pretty close to getting stopped out. Probably will on this, unless it just spikes up. In which case I'll probably close on the spike. There it is. Lock. Up. Down. Officials saw uncertainty over further rate increases at May meeting. FOMC minutes, debt default threatens tighter financial conditions, significant disruptions. Uncertainty over further rate increases at May meeting. They actually mentioned the debt default in it. Man, they're really pushing the politics. Not much reaction there. Oh, but look at the VWAP dipping there. That's several officials discussed readiness to respond to a debt limit crisis. Staff see mild recession likely near end of this year. Officials agreed inflation was still unacceptably high. Liechtenstein, what's he got to say?
Staff see mild recession likely at the near end of the year. Fed minutes
Seems a little bearish, maybe.
agreed that inflation was unacceptably high and declining slower than they had expected. I also saw a comment
no, there's crazy moves like at the end of the day, it lasts like 10 minutes.
They saw
CNS, the continuous net settlement closes at 3.
In addition to that, they were talking about how some of the Fed officials
And
were
then
a little bit split.
and then you have like orders on close. You'll see those in like the last
minutes
10 minutes or
continue,
so.
headlines
Or either buy or sell orders.
You can see again kind of
Price come down a
muted
little bit.
reaction to as far as the indices there. I've got a quick look here for us at what's going on here with, well, the U.S. dollar, which today we've seen quite the run up to near 104. If you take a look at the chart here, I want to just kind of cycle through a couple products to keep an eye on in reaction to the minutes as we continue to get more information. The Fed stressing data dependence, their approach. Ultimately, they talk about cuts being unlikely. Look at the 2-year still holding up around those highs that we saw this week, 4 spots.
Not much reaction at all so far.
The 2-year's been on the move higher.
About to get stopped out. There it goes. I'm stopped out.
We all know the impact that higher rates have on, well, this is the NASDAQ on the bottom half of your screen. You can see the declines off the all-time highs in the end of 2021, beginning of 2022, the lows that we saw last fall, and how we've come off those lows as rates have come off the highs. But also you can see here on the yields, the 10-year's working its way back into the middle of the range here right now. You mentioned some of the debt ceiling concerns that are kind of lingering. I think it's not just the minutes here today on the radar. That's definitely one of the, what was weighing on the indices earlier. It's not just minutes, McCarthy's comments, but yeah, even as I look now, Nicole, 41.25, the S&P is still kind of hanging out here as we digest these comments which are coming across the wire here.
Yeah, and as I go back to Fed Day, May 3rd, I have my notes here, and I was looking, they removed that language of some additional firming, right? They had seen that as necessary in each of the last prior meetings. They took that out of the language, and that gave them optionality. And wouldn't you know it, today, many of the Fed participants actually said it was important that they retain optionality. So this way they can do whatever they need to do. One thing they did note within these Fed minutes was that a lot of the folks on the Federal Open Market Committee saying that the next move, they wanted to see and what happens because of policy lags. So they're very well aware that it takes time for the full effects. And that was something that Jay Powell had said on May 3rd about it takes time for the full effects for these rate hikes to take hold. And we've seen the repercussions in the banks, right? We saw the immediate reaction there, the repercussions for JP Morgan. Jamie Dimon said that there was more to come. So we'll have to see what happens next. What else are you taking a look at here?
Well, kind of just getting to that point, Jamie Dimon talking 6 to 7% potentially he was telling clients we could see. And Fed speakers this week sort of pushing back on the expectations that the banks have done some of the heavy lifting for the Fed. And they said, hey, we may not have necessarily seen that to the same extent that we had hoped to. But I think the real takeaway here, Nicole, is just the fact that there is a little bit of not the same conformity in terms of expectations. And, well, even the minutes show that participants generally agreed that the extent to which further interest rate hikes may be appropriate had become less certain, right? There's not as much certainty in terms of what that next step's going to be. They said, participants said if the economy evolved along the lines of their outlooks, further policy firming might not be needed. But some participants talked about how, well, they commented that additional policy firming would likely be warranted at future meetings. So this is going to be a dynamic and a very fluid situation. I'm also looking at some comments from Fed Waller. He does not support stopping rate hikes unless analysts get clear evidence that inflation's moving down towards our 2% objective. One of the key things to remember here, Nicole, is while we just, with the last rate hike, entered into restrictive territory, everybody's talking about, again, the new CPI numbers recently and how that shows that we have crossed that threshold ultimately on behalf of the Fed's actions, their aggressive actions. But everybody's still pointing to the fact that inflation's still double that targeted level, 2%, doubles plus some. So there's some room to go here still. And this is going to provide a little bit of clarity, but I think there's still going to be an enormous amount of speculation. And I think there's going to still be a lot of focus on rates, as I pointed to a minute ago, the recent run-up we've seen in the 2-year. That's really what the market's focused on here right now. Not only the magnitude of it, but the speed of it as well, Nicole.
Right, and we had talked about the credit crunch, right? I mean, basically the credit conditions, and we said this on May 3rd, that the tightening credit conditions would weigh, and this is what they had said at that time, on households, economy, hiring, and inflation. And here in the minutes, as I flip back and forth, it says much of the same, that the tighter credit conditions could weigh on economy and hiring. But here's the part that could be moving markets. Some participants saw the need for hikes because inflation is declining slower than they expect. That means more rate hike. I mean, OPCO thinks 25 basis points in June. They said it.
You know, Nicole, I tie that back to a strong labor market, right? I mean, a perfect example, I think, a very boots on the ground kind of example. My son just recently purchased a new car. The interest rate payments or the rate on that I thought was extremely high. I'm used to 0% financing, but he's got a job. He's got to get to work every day, right? Ultimately, and he needs a new car, so he's got to pay it. So he's going to kind of see other areas where he'll maybe not spend as much, but ultimately, again, this kind of feeds into the strength and labor conditions, and I think that's fueling a lot of what we're seeing here right now. Strong labor markets ultimately here in the U.S., a big part of it.
Yeah, I think that's a great, sort of color story, because it shows that you're going to have to pay financing. And look, I mean, there are some kind of companies that are offering better deals, but do you want that car? Because they're offering you 2 to 3%. There were some that are up to 7-8% financing at this point. I'm sure you saw that. The other thing, too, is consumer spending, and they do expect consumer spending to slow, and that takes us back to the economy and the concerns about the debt ceiling, and the participants here in the minutes noting that they were concerned about the debt limit and that needed to be taken care of because there could be risks to the economy and risks to the financial system.
Absolutely. I think one could add that, as we did kind of in the beginning of this discussion, to some of the weight that the market's feeling, Nicole. Earlier this morning, we started off the Future Show talking about basically how, yeah, for the most part, the market's kind of discounted those concerns. Expectations were that we'll find some sort of a deal, whether it's short term or something longer term, but in 11th hour type deals, what we keep hearing about. But every minute that we don't get that, ultimately, concerns increase and the likelihood of no deal ultimately, in theory, increases. So it does seem as if while the market up to this point has largely discounted the possibility of no deal, now it seems like market participants are starting to wonder, what if we don't get one? Ultimately, how should they be positioned? And it'll be key to watch here, see if we get some added volatility, because that, again, to my point earlier about uncertainty about rates, it seems like that kind of feeds into a little bit more volatile environment than we're used to over the last couple weeks at least.
Well, we didn't get any dramatic moves. It looks like the market dipped a little lower.
Yeah.
But because
SPY coming down here.
the show, the three major averages were down about 0.6% each.
Yeah, we're basically
now
right there.
they're down 0.8%, 0.7%. So they took a little leg down, or tick down. Thank you, Ben Lichtenstein. Always glad you're able to break these important moments down with me. Thank you, Ben Lichtenstein. Now let's take a look at the bigger picture. James Locke's with us, co-founder of Pool Lock Associates. James, good to have you on the show, particularly on an important day where we get minutes like this. I know a lot of it is probably what we heard, but we certainly get that feeling of inside scoop of what the participants were really saying.
Yeah, and as you just pointed out, it hasn't had too much of a negative effect. You kind of get the feeling that maybe the markets were kind of half seeing this coming a little bit. I'm still in the belief that they shouldn't be doing anything in June because it's too much too fast, right? As they pointed out, it is trending in the right direction, right? So that's good. Let's keep that focus. And all right, so we got to get to that 2% level, but we don't want to get there tomorrow and then all of a sudden we're driving this ship down into the ground and all of a sudden we have recession, right? It's probably better to keep the pain a little bit, the inflation pain a little bit, as long as it keeps trending in the right direction. And that's what they're watching. And like Benny
Barbecue 1075 2669.
Hey, we got to keep watching this.
Climbing for the high of the day. A little bit of volume picking up in there too.
The thing is, let's see what all those bank failures are going to do to the economy as well, because
See if we get a little
the end of all this rate hiking, so that's going to take
got a little
time
cup here on the 5 minute.
to marinate in there, and
If this handle sets up.
Really, the health of the economy and kind of that future path of interest rates, that's going to remain that key focus for investors.
Yeah, and as you talk about those banks, I mean, I'm not sure whether or not there are other banks that want to reveal anything.
Still think we're going to get a gap fill and probably a bigger handle on this inverted cup.
There's community banks, there's regional banks, there's the big money center banks, and that's one of the problematic issues here. I mean, it's not just that the
Barbecue
Fed
2669 1075.
that they did. That being said, I mean, one thing they also talked about was a consumer spending slowdown, that wage growth was still too high, inflation, it was not slowing as quickly as they would have hoped and expected. So what's your big picture for the economy and markets for the next 2 months, 6 months, 12 months?
Yeah, well, it's definitely, a few unknowns going to happen on June 1st, right? But American economy is doing well. Spending is robust, more robust here than it is, say, over in Europe. And we're in a high pace kind of economic activity, and it's a little more in the service sector that we're seeing than in the kind of the goods sector. And the question is, how long is that going to last? This kind of continued, get out of the house post-COVID world? I think it's going to continue for a while, right? I mean, jobs are out there, and if people are willing to pay 7% for homes, in mortgages, then this is going to continue along, and the Fed's going to have to fight that a little bit, right? But it's the question is, at what point does it fall off the cliff? Which is why, hey, if we can, balance it for a little bit and see what happens.
A little handle here.
The real thing is what's going to happen with this debt ceiling, and you said it. I say it to all my clients, like, oh, well, they're gonna work out a deal. Everything's gonna be okay, and they will, and we all know they will. It's just whether it happens on June 1st or not. And if it doesn't happen on
45 minutes
June 1st,
for the power hour to
then the
pump
Fed may
it
not need
up.
to take a single piece of action for a while, or they may need to start looking at
Barbecue
reversing it.
11.24%.
We don't pay debt. All of a sudden, you get a D rating on a U.S. Treasury. That's crazy, right? 2 million jobs could disappear overnight. 5% unemployment. The cost of borrowing to the government skyrocket. I mean, the numbers are staggering if they just trip out of the door a little bit here, which is why, Washington has got to get their act together. And I know I'm in Delaware, so I'm right here by, President Biden. But I really don't think this is a political thing. The Republicans are making, even the Democrats are making it that way. They need to stop all this craziness for the Americans.
Yeah, no, I agree. I want to get your advice to investors, and I don't want to run out of time. Get your note to President Biden. Put a note on a pigeon. Fly it straight into the White House, since you're close enough. That being said, I mean, what's your advice to investors now at this point? Yesterday, we had JP Morgan talking about going to cash and gold, saying the rally won't last. Oppenheimer said that you can expect, they were betting a 25 basis points hike in June.
Yeah.
What's your advice to investors? Do's and don'ts.
I'm an
It's close to the high of the day on barbecue.
Yeah, I love
11.24.
I really do, but it's all about being in the right place in the market, right? And so yes, earnings estimates are dropping. We're going to see more
volume
volatility. That's for sure. It's going to continue.
Spikes in there.
But besides this, like
30 cents is on the horizon.
Recession here. History says that the storm is coming. We can reposition. Make sure that what you're in is paying you. Right? I always talk about that. Barring some sort of major global calamity, even worse than defaulting on debt. I'm expecting stocks to be higher a year from now. There are a couple that I talked about, AbbVie and Cisco, AT&T. These all had, dropped, and where I look at it, these positions still have more upside, and they're paying a nice dividend. On the kind of the straight growth side, Warner Brothers had a great Q1, and had fallen off. And now that one doesn't pay a dividend, so it depends on where you fall on that kind of scale. I always really like those higher income pieces in this piece of uncertainty at this time. Like I said, I always love the market. I don't want to get out of it. The market has been good, through its history. It's just a matter of being in the right place.
Yeah. And I'll add, as I mentioned, the JP Morgan call on going to gold and cash that the rally won't last. They also now have a 25% chance that the debt ceiling won't have a deal, that they won't have a deal, and that is on the rise. And that obviously remains a very big wild card. Thank you, James Locke.
Yeah.
Good to see you, co-founder
Thank
of
you.
Locke Associates. Later this hour, we're tracking the labor market trends and how AI could be changing things up a little bit. Also, we'll talk with the head of Craft AI ETFs about an industry first, a fully AI-powered ETF that could transform risk management as we know it. And our panel will take a look ahead to the big earnings report in the cloud sector. We got a couple coming up, the companies to watch. And up next, what consumer spending may tell us about recession risks and protection strategies to
Still acceptably high. Yeah. Yeah, that's it's CPI. Been like 20%, 25%. Not sure if this handle's playing out. Barbecue climbing up. 26.95. Start filling that gap again. The gap's closer to like 30
like we
cents.
did in 2011. It doesn't really seem like it's happening so far this year because I think most market participants believe that we're going to get some sort of a deal.
Yeah,
And
29
so
cents.
I would say that if we get a lot of volatility because we pass a deadline and there's some selling off, I would
Also
think that would be a
support.
great buying opportunity for long-term
What's a
investors.
line for me?
And that would be my advice to the people that are viewing this today.
I see. In the meantime,
Moved.
you've been looking for high quality types of investments. You even, that's one area. And then you also look to growth like tech and abroad to international. Tell me about some of the strategies that you have at this time.
Well, last year we were very overweight energy, which really helped out our portfolios and performance. And for our clients, it was a good thing. And as energy, outperformed all the other sectors, we started to take the chips off the table and profits. And we started looking at opportunities that looked like value. And where we found some of that was in technology, believe it or not, right? So now, value in technology stocks. And as you talked about some of the companies that have gone up a lot this year, it's been a very narrow market in terms of breadth. The mega cap companies in the tech space that really led the market down last year, much more decline than the S&P 500 in general. The NASDAQ was down almost, 1.5 times the S&P 500 last year. It's not a surprise that these big tech names have come back as much as they have. And so I think investors were probably too invested in some of these names leading up to the decline last year, but I think they were underweighted probably going into this year. And so we've added to technology. We've also added to some consumer discretionary. And as I've said in the notes, international stocks are also an area that we like. European stocks are doing very well this year, beating the S&P 500. EFI, the developed markets internationally, have beat the S&P 500 last year, and we think that trend can continue. Domestically, I would really stick with quality names, quality earnings, quality companies that can provide a good return on capital, and also that's the same with bonds. Sticking with high quality bonds and companies that have good credit.
Right. You did say that some stocks seemed attractive at this point because I guess they've pulled back some. I know you just talked about the different areas, a lot of energy last year, and maybe dipping your toe into tech and other things this year. Do you name some names, some that stand out to you?
I can't give you any specific names, but like I said, technology, consumer discretionary names, especially in the services area. We know that the services area is where the economy is still hot, where employers are still trying to hire people and they can't get enough. I will also say that in some of the major layoffs that we've been hearing about in big tech, they were probably, oversupplied with labor and paying up too much, looking at growth down the road that didn't really materialize because we did have a decline in the markets. But I think that a lot of those people that were, out of jobs and have gotten laid off have been back, with new companies now. Maybe they're not at the same kind of salaries that they were before. But I think one of the things that's going to happen is that inflation is going to continue to go in the right direction. I know you're just discussing the Fed minutes, but I think inflation the headline numbers are going to look a lot better because of housing and what shelter means to the
Back to this 410
CPI,
level.
which is approximately 40%. Those numbers are going to start to get reflected in the coming up reports. And so I hope the Fed doesn't, increase rates any longer. Hope there's a pause. I think that cooler heads will prevail in Washington and we'll get a deal. I hope there's not too much volatility. But if we do get volatility because of the debt ceiling issue, for traders, it's going to be a tremendous opportunity. And for longer-term investors, if you've been sitting on the sidelines in cash, it's a great time to get your money to work if we do get that volatility. By the end of this year, I think equities and fixed income will be higher than we are today, and it'll be a positive year.
That's an important statement right there, too. Jimmy Lee, great to chat with you. Thank you so much, CEO of the Wealth Consulting Group. Thank you, Jimmy. Coming up next, the tech sector obviously has been hit very hard last year, this year, by a lot of layoffs, and it's still going. We'll get some details on that, and we'll find out what
US dollar index rises after Fed minutes. Last up 0.319%. Five. Went down. MACD crossover. Got a bearish MACD crossover in the last 5 minutes. Might actually start making close here. MF is bouncing up. Percent on that. Another bounce off of support? Maybe. .2% on barbecue.
So I think it's going to go from bad to worse, unfortunately.
So I wonder when it turns around. When do you think it could turn around?
Well, when they stop raising rates, when they acknowledge that we have been in a recession now for 2 quarters at least, when we get through this commercial debt crisis, whatever the heck that means, when we get inflation under control, and the economy starts to steady out a little bit, and companies feel a little bit safer and ready to hire again.
It's interesting. So now you said 3/4 of them are on a hiring freeze. When they're looking for tech talent, I mean, there's no question. I mean, Mark Zuckerberg, and I pulled it right out when we were doing that earnings report, and I was on camera, and I was quickly like, I said he called it the year of efficiency. I didn't realize that that would become the quote of the year. I mean, it really is. So, I mean, is AI going to be a good thing or a bad thing for jobs?
Well, right now, the most popular and fastest growing type of tech job is an AI engineer, ironically. So that's, if you have...
What do you have to study to be an AI engineer?
Machine learning, data science. You don't need a college degree for it, though. You can be self-taught. You don't need a PhD from Stanford. These are there's so many great tools now, and you don't have to use GPT. There's open source tools you can use to build your own AI models. And so I think it's going to be a net efficiency gain, right? It's Zuckerberg is an unusual specimen because he had to kill a whole VR effort, billions of dollars. But every company is this is the year of efficiency, and AI will be a small part of that, I think.
So as you work with, I mean, when we talk about the companies, the kinds of companies that you're working with, you mentioned some big names there. look to you for? They want you to find like a headhunter, right? And you're basically finding the talent. How do you go about finding the talent?
Well, so we have lots of talent now. I'll give you some numbers. So 6 months ago, Brain Trust had about 75,000 talent on the network. We're now over 300,000 just 6 months later. A lot of those folks who very qualified people who just got laid off. And so with Brain Trust, it's very easy to find the talent. They're already pre-vetted. You can hire them for contract or full-time. It's very simple. But using AI, it's every job where you're doing manual things, sending emails manually, that is going to make that more efficient.
So you said you've confirmed you saw 170% increase in jobs posted for AI machine learning and the talent available. So would you suggest, like if someone is in college, to continue to take what, data science, computer science? What's out? Don't bother taking it.
English? I mean, look, technical skills are always in demand, and the demand is only increasing.
Please
right?
don't
Not
stop
just for
taking
tech
English.
companies, all
Please learn
companies, right?
English.
Nestle, Nike, Goldman Sachs are big clients on Brain Trust. Those aren't really tech companies, but they have an insatiable demand for tech skills.
Sure.
And you don't need to go to college for this. Do not get a computer science degree. Go on YouTube and learn it for free.
Yeah, and in the meantime now, how do you think the worker is
Sorry, the grind. Thoughts on barbecue? I think it looks beautiful. I think we've got room to go up to like 28 cents for that gap fill.
Yeah, I think consumer confidence,
Which is also happens to be that support from here.
Needs to think about doing their job more
Oh, sorry, up here.
Learning more skills.
That was that first resistance we broke today, which was a big resistance to break, and did it with volume. So very bullish looking there. Gap fills like 29. I think we could hit that today. Maybe tomorrow. And potentially like a pullback on Friday.
Tell me the different types of companies that are under the umbrella.
Every sector.
I know it's a slew, but just give us some color so someone understands how to
28's kind of the
and get a job that they need, or the other way around. A company can get the right person to fill that skill.
Sure. I mean,
28.80 or 29.
Like a tech company.
Yeah, 29's gap fill.
Nestle, great example, right? During COVID, they kind of got caught flat-footed. They had no e-commerce. Now they're
This looks good. Looks bullish.
Right?
I've been dip buying basically.
To pick up. So learning SEO and SEM, ways to market online, ways to build.
Yeah, filler, cap, peeler.
My software, QA. There's so many roles in this, and that is the biggest growing part of the knowledge worker economy.
What about hospitality and leisure? What happened to that? I thought that had a big
Naps.
boost after COVID.
Barbecue
where,
good.
Everybody was laid off, every restaurant closed, and then there's been a lot of churn.
There's this amazing dislocation.
Yeah, end of day flush. I don't know if I'd be buying it this late into the week because you're kind of we're kind of near, I think, the resistance.
Hotels are like
So
$2,000 a night to stay in. Where I live in California,
you might be selling today or tomorrow, but that's on you. I guess you're playing with that.
So we need to fix immigration.
I think you'll get a pullback after we hit a resistance here.
Yeah, well,
Supply moving up.
I guess the ones that you need to do those certain jobs would be ideal. And I'm sure many of those jobs could be filled by certain folks. That being said, tell me about how Brain Trust
He's coming for that booty.
this footprint, because you're talking about some big, not Fortune 500, you have Fortune 1000. There's a lot of companies here that you work with. How did you get this footprint?
There are big companies using it, and Brain Trust.
Investor Place posted that? Interesting.
And a very simple reason why. It's a network owned by the
Put it on our
users
Discord.
who make their living on the network. And when you're owned by your own clients and users, you can charge really low fees. So most staffing firms charge 50%, 100%, 200% markup just for staffing a company, or like Goldman Sachs. We charge, Brain Trust charges 10%. So it's better economics, and the users.
Thought about taking the long on that test, but well.
So would someone upload their
Still just choppy day so far. The short and the break open would have been nice. Other than that, not a whole lot of good setups. This double bottom was okay. I was late on that though.
Their resume, create a profile, and then they go through a vetting process. They get screened on. Are you who you say you are? Do you have the skills you really say? We'll go through testing, and that's the quality vetting part.
That's got to be labor intensive for your team.
So it started very labor intensive. Now it's being automated, and a lot of the community does it as well. We have a token, a crypto token in the network called Brain Trust Token that people get paid for doing community screening. So it kind of makes it go a little faster.
Oh, that's actually really interesting. Yeah, because it sounds like, I mean, you could hit a variety of folks. Like I know people who are, you know, coming out of internships from college and need jobs. And I have a friend who's over 50 and lost her job and needs a job.
Yeah.
So, you know, I guess you could really have a multitude of different types of folks. Thank you so much. What an interesting conversation, Adam.
Thanks for having me.
Thanks for being here. Adam Jackson, co-founder of Brain Trust.
Half day on Friday? Memorial Day or something? Is that true?
Still ahead in the second half of the show.
I don't know. Not heard of any half days on Friday. Ah, your identity's been revealed. Now I know, Daniel. I know who you are. Oh, never mind, you have the same name on there. You're the only person that has the same name on YouTube and Discord. I'm moving up here. Is Ryan Cohen going to save bankrupt Bed Bath & Beyond? Barbecue looking like it wants to break down out of the channel. Even if Ryan Cohen takes Bed Bath & Beyond over, there's no guarantee the retailer will become profitable again. Says today, barbecue stock is rising as anticipation mounts around its upcoming stalking horse bid scheduled for June 1st. Part of the driving force behind this is the possibility of noted meme stock investor Ryan Cohen using the opportunity to take over the troubled company. However, this doesn't mean investors should be buying shares. What's more, even if Cohen does throw his hat in the ring, there's no guarantee he'll be able to make Bed Bath & Beyond profitable again. Here's why investors should still avoid barbecue stock, regardless of who's at the helm. Here's why. Interesting. Yeah, he makes me, this article makes me remember this could be a sell the news type event. With rare exceptions, Investor Place publishes commentary about companies that have market cap of less than 100 million. Yeah, thanks for sharing that.
So tell me about, you know, everybody talks about AI, machine learning, and where does it fit into your world and your business?
Sure. So we're the AI
5 p.m. Eastern, huh?
apply AI into the investment process.
On a Thursday.
We're providing multiple solutions to other financial institutions. So we are a B2B provider. So we are applying AI into specifically to finding the problem solving for the financial market. Our main goal is trying to find a sustainable return over the time. So we do utilizing similar technologies of what ChatGPT is using, but we only narrowing down into financial markets.
So you're using AI to make good investments,
Yes,
right?
exactly.
I mean, that's basically it.
Yeah.
You know, some people, look at the balance sheet, and if it doesn't have enough cash flow, out. If it doesn't, what are some of the? Do you have to teach AI some of the parameters that you're looking for, and describe to AI what makes a good stock to you before it can go searching?
Very good question. So there are three core components of the AI to learn the financial market.
Barbecue coming down some.
To solve the problems. One is what types of data the AI wants to use. We need to select the data set. Second is architecturing of the AI engine itself. The last one is training methodology of the training the AI to get the insight, machine insight.
Not really calling this an RSI divergence because this is higher, but it is just a wick, which
we are specializing this
sucks.
Area, and we are applying this into the ETF space since 2019. Our QLFT AMOM was available since 2019 NYSE, and we just launched another one today, AIDB.
Okay, so yeah, we should look at those.
I think I just need to hold it.
AIDB is the one from today.
Got a nice cup and handle breakout here.
QLFT, US large cap, and the other
which
one's
goes with Kraft, right?
Yes,
that makes
exactly.
sense there. That being said, so today's one that we were focusing on, and that why you're here today, Kraft AI Pilot US Large Cap Dynamic Beta and Income ETF. So, what kind of companies are in there?
So this one is actually more like asset allocation type of ETF. So this AIDB is leveraging our AI to switching between the US large cap and then income or the cash position. So basically, when our AI model is telling is time to participate in the market, 100% go to the US equity. But when our model is telling the signal is there is a downside risk, then it goes down to the cash for the downside protections.
Wow, so it's timing the market.
Yes, timing the market,
exactly. What it really is doing.
Exactly.
So AI obviously can use technical charts, highs and lows and things like that.
Yeah.
I mean, does it know that the debt ceiling has a June 1st deadline?
AI itself doesn't have that information, but there is a...
Does it matter?
It matters because the debt ceiling, as we're getting close, and still the debt ceiling is not solved yet.
Right.
So there is the anxiety in the market is the leaving some signal or mark into the data set. Like today we are seeing the VIXs are getting close to 20 plus. Yes. And that those types of the input data changes actually impacting into our AI models decision making.
Right. What would you like to see happen here? This is a large cap fund, right? You're going in and out of large cap equities or into cash.
Looking at some cash good puts on Groupon.
Market AI thinks there is in the market. What would you like to see?
I did. This thing's up like every other day. Crazy earnings run up.
You're the managing director here. You're head of ETFs. When someone says, "What are you hoping to see?"
Nirvana still look good.
Okay.
I mean, are you going to tell me that you want AI to beat the market by 20% or something insane?
Yeah.
Which would be great.
First of all, our QLFT has been beating the market over the time. It's been the 4-year anniversary only this
4
this
years.
week. Yeah, this Monday.
And how have you done over the last 4 years versus the S&P?
Delivering 12 percent point outperformance over the SPY.
So
over
that's a big deal.
Yeah. We are the probably only one AI ETF provider able to beat the market over the long term. So you talk about like what I want to or what our company want to do in the 1 to 5 years. So it could be bold statements.
AMC's down 4% today.
There will be the day that AI will be set another.
Children's place.
Beta in the market, beta in the market. Right now, the conventional
doesn't like the children.
Is about all the market cap weighted indexes. But if the AI is continuously proving itself to providing able to deliver better performance later than the market cap, then it could become another beta to the market.
Interesting. So does AI like AI companies?
For this month,
first of all, I mean, like look at NVIDIA, right? I mean, that could be just an indication right there.
One of our ETF AMOM and its top holding this month is NVIDIA.
Oh, I see.
Yeah. Last month it was taking favor into the. It shows a favor into the Apple, but this month the AMOM is taking out Apple and getting into the NVIDIA and Meta. Those are AI-related companies become one of our most favorable AI conviction list for our AI ETFs as well.
So it's been moving out of Apple and into NVIDIA and Meta was the other one, right?
Yes.
It's very interesting. How many ETFs roughly are there that the company is sort
Geez,
of...
IAP down 20.
we currently have
12%.
4 ETFs in NIC right now, and 3 of them are
That's
stock
crazy.
selection. The new one today is the asset allocation model.
Right.
Yeah.
I mean, when you think about this asset allocation, so it's basically equities or cash. Is
Yes, yes.
It doesn't incorporate crypto or
Not yet.
T-bills or things like that. Would you
Yeah.
like to see some variety?
We do already have the variety or the multi-asset the solution that we're providing to the other financial institutions, like SMA signal to them, but not yet into the ETF space yet.
Right,
So in
right.
one day, possibly, yes.
So, I mean, when you talk about beating the S&P
Right.
over 12, 12 percentage
yes.
points, roughly. Okay, let's say
Roughly.
10%
Yes.
plus over the last 4 years.
Yes.
You have no way of knowing if that will continue. I mean, is there anything you can count on here?
I think that one of the distinctive advantages of
continue.
the AI compared to the human portfolio manager is the AI doesn't have ego.
Yeah, yeah.
AI doesn't have emotional biases.
psychology
Yes,
and-
it doesn't have attachment to its original stock selections.
Right.
Yeah, like I was a portfolio manager a long time back, but it's always like
Yeah.
when I select some stocks, I keep
Yeah.
piling up the stocks. All the reason of not to sell because this is stock I love, but
Right.
AI doesn't have that. It's
right.
cold-blooded. So
I mean, would you feel comfortable saying
Cold-blooded.
it's likely it will beat the S&P at least?
I believe so. I
Yeah,
believe so.
likely to beat. Would
Yes.
that go for all of the names that we talked about, or at least the AI-driven one, right? The AIDB.
AIDB is it
Is the
could
one.
be interesting for the long-term investment, like not
Right.
a buy and hold, but
Right.
buy and hold or hedge.
Right,
And
right.
that is done
and
by
the other
AI.
one, Kraft, has done very well.
QRFT, yes.
Yeah, QRFT. Great to chat with you. This is great. I'm glad
My
you're here
pleasure.
today. Thank you so much. Francis O of Kraft AI ETFs. Still ahead, we'll bring in our panel to discuss some of the cloud stocks, names like Workday, Snowflake, and more. Watch us with
Burn didn't quite fill that gap. I think it still wants it. Can't believe IP, dude. That's awful. Think of why gonna make it? Well, they have X dividend on the 30th. I'll wait on that play. Laser. If large based on BBBYQ acquire ignores RC's transparent interest in buyback. I mean, I guess they're kind of negating all, whoa, SPY flush there into Power Hour. They're kind of negating all that because he sold after he submitted that letter and everything to the board. So he submitted that letter, he bought in, everything was kosher, and then he sold. And it would be presumably because nobody said in the interview things didn't work out. They didn't have the same goals in mind, whatever. So there'd be no reason to bring that back up.
Against our 45% product growth in Q1, and probably expect them to maintain their 40% growth for the year. I think it's too early to go raise the bar, and there's still some
corporate rate better than Chapter 7. Yeah. Chapter 7, I don't think we're gonna get anything.
And an inline guide.
I can have their own problems right now for sure, dude. That's crazy.
Speed and inline guidance. That's important there.
Nicole Treasury card.
Over to a name like Workday.
He does.
Thursday.
I appreciate the effort, also.
What were your thoughts there?
Yeah, so similar to Snowflake coming into earnings, we do think the stock is undervalued as well. We have a
They're probably gonna cut that divvy.
$29 fair value estimate on the
I don't
name
know.
going into
It's a
earnings.
risk.
And what we really like about Workday is they're, gradually continuing to chip away at replacing or adding new ERP modules. And so they're just getting a more complete and holistic ERP portfolio that can really challenge companies like SAP and Oracle. So we think that by 2033, Workday will surpass SAP in terms of that total ERP market share.
Wow, so in about a decade, Workday could surpass SAP for that market share. That's actually a really interesting projection and very notable. Derek, when we look at what's going on with Workday, tell me your thoughts. I mean, we have an environment where you have Washington trying to basically have a higher unemployment rate. Where does that fit in?
Right, and it's just kind of a tale of two cities between Snowflake and Workday. This stock has been flat the last few months. Expectations are pretty low. The valuation's about 5 times next year's revenue versus Snowflake at 15 times, and it's about 20 times free cash flow for a company that we think that can grow 20% for the next several years. That's an attractive valuation. But yeah, expectations are low. There is concern around what
coming down, still just chopped around this range.
Of course, the year, whether that weighs on their ability to keep driving new modernization.
I don't know how much exposure I went to all these banks, man. It's sketchy.
HR and finance is a high priority investment because they
playing musical chairs.
And long sales cycles, but
which one's gonna fall next?
The company has shown very good
Music
durable
stops.
growth execution. We're expecting inline slight beat versus our 20% short-term backlog growth estimate for Q1. So we expect kind of continued good consistency in the numbers.
All right. Thank you both, Julie and Derek. Julie Bishalt Sharma, Derek Wood, thank you. And thank you, friends, for being with me here on the watch list. I'll see you tomorrow. I'm Nicole Pedalides, but keep it right here. Oliver Rennick, Market on Close, next.
Oh, barbecue came down a little bit. Well, not bad. Crazy seeing them add all these strikes. Banks options chain. They are like the newest meme stock. I'm mentioning that is on like GME and AMC when they're squeezing. Got all these new strikes in the puts. $2 per share. That is crazy. Hours here, 3 o'clock. Congratulations, you made it. Made it for all the chop on the day. Guess the gap fill's happening after hours. That happens the next hour. I think we do get a bounce Thursday, Friday. Maybe a new low first though, 408. The bear flag on the hourly, but I just like this support and this like perfect looking cup. Inverted cup.
The next couple months. Or you could go with debt ceiling. Good luck with that one. A lot of politics, a lot of drama, and reading of tea leaves that I will leave to the political pundits. So far, there's not a lot of sign that the market is interpreting the debt ceiling as any kind of crisis like it was in 2011. For that, we'll be looking to see if risk-off tone finds its way into long-dated bonds the way treasuries rallied back in 2011, or if we see a big spike in VIX. But there's just a small move in VIX right now as we're still right around 20. And it looks to me like the risk-off tone in stocks is probably coming from somewhere else. And I think it's probably inflation and possibly a rate hike that's not currently priced into the market. Let's start first with some of the earnings. Can't lose sight of what's happening on the stock-specific front. A lot of retail names overnight and kind of a couple shock winners. You can see that the retail ETF XRT is outperforming on the day. It's still down, but it's also kind of a weird market cap weighted fund there. So I would just look at Urban Outfitters and Abercrombie & Fitch as the clearest examples of a little retail surprise this morning and overnight. Some big gains in these companies as they shore up their inventories, try to find the sweet spot for what consumers are able to buy. But I do think that they show an interesting kind of example of what's happening for the consumer, which is softening compared to a year ago. It's got more credit debt than a year ago and still is dealing with sticky inflation prices, but it's still spending. They're just moving down the price points a little bit. And so you see some old classics like Urban Outfitters and Abercrombie & Fitch, some mid-priced, multi-channel retailers doing well. And it's not because they're necessarily booming in growth. They still have mixed results from brand to brand and label to label within the category. And you see other companies in the retail sector down near the lows. We saw Kohl's getting hit still. And tonight we're going to be looking at makeup over the next 48 hours and perfume with Ulta Beauty and Estee Lauder. Another example, we've got a stock doing very well with Ulta and Estee Lauder down near the lows. So there's certainly a lot of variance within sectors that depend on what actual items these companies are selling and the degree to which they are luxury and expensive versus affordable. Bottom line is the consumer is still spending, just maybe with not as much gusto as during the COVID stimulus-driven boom. So now let's take that and let's go into some of the economic stuff that's happening here today. Because there is a sign that maybe the data have been still too strong and possibly too inflationary. We'll see what we get on Friday for the Fed's liking. You got the dollar pretty firm. And I'm really watching this thing like a literal hawk right now because it is, I think, still the most reliable tell about surprises from the Fed versus the market's expectations. If you look at the intraday move, it kind of looked like the dollar was going to fade a little bit there as Fed minutes came out, but actually it's affirmed right back up to near 104 again. Actually, we're kind of near the highs of the morning. 103.83. We're at 103.8, so we're basically there. And watching bond yields to see if they follow, and they might be a little bit with the 10-year back at 3.7. Without going into the rabbit hole about bonds, I would focus on the dollar. But basically the gist is that because the economy has softened a little bit, maybe bonds won't be as reliable a tell if you're looking for yields to explicitly tell you when the Fed is going to hike. I think the dollar is going to be very useful again. Dollar strength probably ends up correlating to higher yields but we'll see how the economy handles a hike. Maybe we'll get into a situation where we're hiking, but the economy's soft, and that could be an interesting situation for bonds. But generally right now, the dollar reflects what was reported by the Bloomberg headline as being a pretty evenly divided Fed minutes, but the fact that the dollar's not softening up, yields are still kind of sticky on the day, and considering what we've had here over the past 10 days for the dollar, the fact that it's
up
keeping its
8.5%.
elevation,
It's a great day.
I think relative to expectations that a lot of investors have for Fed cuts later this year, they're probably still getting a little bit surprised by some of the hawkishness from the Fed minutes. Now, looking over the past year, just want again to look at the numbers, point out that if the dollar is moving higher, you probably do get yields to follow. Generally, the correlation is there between the two, but we've seen a little bit of fraying of that here and there, so just something we want to keep an eye on. And then finally, on that same topic, I'm watching Bitcoin closely as well. I think this thing still has the magic touch. Not as money, not as currency, not as a banking replacement or any of that stuff. Certainly not as gold as we learned over the past year and a half, but as your tell, no other asset has a narrative so dependent on a vision of the Fed being dovish, being accommodative, cutting rates, being supportive, and getting backed into a corner and not being able to fight inflation. That's Bitcoin's story, that the Fed won't be able to fight inflation. So anytime we see Bitcoin soften up, a lot of times it is right before we are going to hear from a hawkish Fed. So the takeaway for me is it seems a little bit like this market's starting to think about potentially an interest rate hike. I got Kevin Hinks and Alex Coffey joining me here this afternoon. Alex hosts the Next Gen, and Kevin hosts a Fast Market. Good to see you guys. And we got Martin Norton from Morningstar standing by with us. So we got a packed show this afternoon. Kevin, is this more a market that does look like it's thinking about the Fed versus the debt ceiling? What do you think of my editorial there?
I really think so. You and I spoke about this morning.
Yeah.
I think everyone thinks when the debt ceiling is approved that the market will just fire back, and this is concern. I think, Oliver, that's a distraction from what's going on with inflation and interest rates and the U.S. dollar and the overall toppiness of the NASDAQ and the fact that NVIDIA, which comes out with earnings today, and all the hype about AI, I don't know if it's going to put anything in NVIDIA's bottom line. NVIDIA is still an unbelievably strong, dynamic company, but I don't know if AI, this earnings with as far as NVIDIA's run, now it's corrected the last couple days, but there's going to be a lot to prove here. And the data, Friday's income and outlays data is going to be enormous in that if it comes in flat, like the year-over-year PCE is talking about for the core, and higher in the headline for the year-over-year, those are numbers that are going to continue, Oliver, continue to scare people at the Fed. I mean, it's hard to argue with what rates have done, what the U.S. dollar's done, and how finally
SPY's coming up here. I did take a long on that bottom again. See if we trade back in this range. Going long on SPY and Power Hour. Don't know what the percentage is, but it's got to be pretty high.
They came in as advertised. There was some discussion about pausing, but they all voted unanimously to raise, and now they're data dependent. Well, the data is not on their side for a pause, if you ask me. So
Want my baby
there's
back?
a lot going on with
Barbecue got bought out.
A lot of people calling for
Fox News.
People to
Quite the reaction we're seeing on the stock.
Exposure. Oliver, some of this movement in these stocks, it's warranted.
Okay. Alex, what do you think when we get Fed minutes, debt ceiling in the background, a stock like NVIDIA? I mean, it seems like this time on Friday, we could be talking about any of these themes as being the major market mover. Maybe today it kind of looks like Fed and hike worries. So where do you stand? Where do you fall?
Well, I think it's as we get closer to the deadline, it's going to be more and more debt ceiling if there's not going to be a deal, or at least there's more and more fears of a no deal. Because again, we describe this as this high-stakes game of chicken. As those two sides get closer and closer together in that game, it gets more and more fearful. And so it's the same as we really start to bump up against that deadline. If there isn't this perception that progress is taking place, I don't think that there's serious fear at this point, but there's maybe more fear today than there was a month ago. And so you start looking at it that way. As we get incrementally closer, that fear is going to get ratcheted up. In terms of the Fed rate hike policy trajectory and the data and things like that, I think that there also has to be a conversation around the fact that we also haven't necessarily seen economic data fall off a cliff. We also haven't seen super concerning things in terms of the banking sector in at least a few weeks. The credit tightening conditions, while they haven't necessarily completely normalized from where they were, pre-SVB, they haven't necessarily gotten tremendously worse at this point. So the landscape that is going to allow for higher interest rates is a more beneficial one for market participants than one that was going to require cuts. And so I think, yeah, maybe we do see higher rates, but that's a good thing, Oliver. You'd much rather see a battle against inflation than a deflationary economy and deflationary money taking things over. And so it's hard to get a perfect environment. It's not Goldilocks either way, but we've seen this market get a little bit more active to the upside recently, the exception the last couple days, because some of those worst fears haven't come to fruition yet.
True.
RMQ beating up a little bit, 2670, back to 10.8%.
We're kind of back to that catch-22 to your point, where it's whatever the inverse of Goldilocks is, where it's like as soon as things start to look good, it's like, oh, we still have this other thing we got to worry about then that's going to keep prices elevated. Appreciate the thoughts, guys. Good analysis here on the main subjects today. Kevin Hanks and Alex Coffey, our hosts here on the TD Ameritrade Network. Joining me in studio, Martha Norton is the Chief Investment Officer of Americas at Morningstar Wealth. Martha, great to have you here as always.
Thanks for having me, Oliver.
We've got Fed odds right now from the CME Fed Funds Watch tool for the next meeting in June, up to about 30% now for a 25 basis point hike. It's been creeping the last couple weeks. Does that make sense to you?
I think one of the things, one of the observations to make over this past year has been this disconnect between what the Fed is saying and what the market wants to believe is happening. And this obsession with the idea that the Fed is going to pause, that the Fed is even going to cut rates, it seems to have been a little too deeply embedded in the market psyche. So I think some acknowledgement around the uncertainty of the environment that we're in, that inflation hasn't come down.
You need to pull the mic off of our throat.
That the labor market is strong, that the overall economy is strong. I think some acknowledgement from that by the market is a good thing, because then it helps us prepare for kind of a wider range of outcomes.
In terms of where it's been embedded the most, I'm looking at your notes where you describe the near-term risk for volatility in equities as high.
There's no source. There's nothing.
These rate cuts have been pretty well embedded
because
into
jokes.
the stock rally that we've had the last 6 months.
That's right. So not only that, but then also just kind of a blasé, approach to the debt ceiling and assuming that everything's going to get worked out. Now, I'm not saying that there wouldn't, that things wouldn't work out. But when we look at the rally that we saw really starting in the back half of 2022 and then going into the first quarter of 2023, we don't have the same kind of valuation margin of safety that we had, several months ago. And so that just makes any risk that we're facing potentially a greater source for downside disappointment.
We got earnings a little bit better than expected, but still generally declines over the past year, even for giants like Apple. It was just a story of 1% or 2% instead of 4 or 5% declines in growth for earnings for a lot of these companies. But then we have this craze around a thematic notion of how AI is going to revolutionize the world. I mean, how do we kind of separate what is Fed-centric, what's rate-centric, what might be legitimate, earnings potential? What is your kind of read on where the hype train is in this market from extreme to not?
Gosh, it's tough. It's tough to know what is baked in and what isn't baked in. But the one thing that I think we know about uncertainty, and the uncertainty, you're talking about these longer term trends with AI, and then also just kind of how healthy is the economy? How healthy are these companies?
Yeah.
How much pain can they sustain? I think all of that means that likely the actual outcome or the actual future isn't perfectly priced in to stocks today. Fixed income is offering us a little bit more protection on the yield side, so maybe, and also fixed income tends to be a little bit more pessimistic in general, so maybe we have a little bit more room to feel like the valuations there are appropriate. But on the equity side, it's hard to say exactly what's priced in because people don't really know how these trends are going to play out.
Sure, and a lot of it is very speculative right now, especially on the ICE stuff for sure, which is why NVIDIA is so important tonight. Do they actually have the ability to put numbers down on paper? Will they commit to new guidance
BDS
based on this
tonight.
seems like an important thing. So that'll be a conversation for later. Right now, with
I don't want to
bonds,
hold contracts
the minutes
overnight.
that we see is being described as divided, but then we've got inflation on Friday, and the last print we got, there was a major economic print yesterday for PMI services, surprisingly strong. What happens to the bond market if the Fed does kind of have to go more aggressive again?
Well, I think there's room for fixed income to see some pain if the Fed is a little bit more aggressive than the market in general has expected.
Okay.
But even if we do see, some kind of short-term disappointment there, I think we're just in such a better place than we were a year ago, given how much yields have changed over the past year to the better. I think there's just more room to survive any sort of disappointment on that front. So we're not overly concerned on the fixed income front. Now, of course, fixed income is a broad market. So as you start to look at areas like high yield and emerging market debt, you have those nice fat, 7-8% yields out of those markets, but potentially, some more concern if economic news disappoints and those companies have some struggle. So, you kind of have to separate the bond market as you're taking a look at it.
Yeah.
But by and large, we think it's not a bad place to be.
If you're an investor or a bond portfolio manager, or someone trying to figure out their allocation on the fixed income side, you remember 2022 where you got torched on stocks, you got torched on bonds, and basically we can blame that on inflation. We're not seeing quite that yet. Yields still kind of contained, but what are the odds in the safer stuff in treasuries if you don't want to take on the premium risk of the credit with a foreign bond or a higher yield bond? If you're just thinking treasuries, do they have the risk that we could catch fire like we did last year and suddenly these are not operating the way they should as hedges in the portfolio?
I think given where yields are, we're going to see a lot more hedge-like behavior out of fixed income. Now, of course, we have to navigate this debt ceiling, and at the short and the very short, T-bills and the like, potentially there is risk there just for yields to pop.
Real short-term
yes,
related to debt
CBS.
ceiling.
as we kind of navigate this period. But longer term, this isn't something that we're overly concerned with in terms of a repeat of 2022. Now, that doesn't mean that there's not going to be changing dynamics if we see rates settle out at a higher level, we see inflation settle out, not just for this year, but over the longer term, how you navigate fixed income, how you navigate equities in that kind of regime change environment, I think does need a bit of a rethink. But for the foreseeable future, we're not raising the alarm about fixed income.
Okay, so the idea is that when we're at 4% yield roughly, just kind of to go the 10-year at 3.7, a little bit more buffer.
That's right.
Than when you're trying to come off a zero bound, and
Okay,
that
fly back to
means that,
VWAP.
stocks start to get
I'm
slammed.
above it.
Maybe we'll see bonds work as a hedge.
That's right. And I don't want to be overly pessimistic about equities either. I think there are select areas that have really suffered, that have a little bit more margin of safety. And not to stick my neck out too far, but banks being one of them. The banks have really suffered over the period that we've been in. A lot of terrible news priced into them. Not saying we're out of the woods yet, but certainly prices are a little bit more attractive to a value-oriented investor than they would have
411,
been.
52 is kind of
Thinking about the risk reward,
one of the highs we
what's
have there.
interesting is the way this market has traded banks alongside some
See
of
what
the
happens up
cyclical
there.
stuff like energy companies.
That's right.
If we see this big tech rally fade, do you see an environment where it could rotate? Let's say maybe we get banks and cyclical stuff to kind of firm, maybe some of those inflation-linked commodities, or is the risk here that we get broad selling again? What's the possibility that the strength for tech could just kind of rotate into somewhere else?
Yeah.
Like, will you have equity hedges within that as an asset class?
I think that energy and financials are tied to somewhat different macroeconomic
I'm closing my longs there.
outcomes. So in that sense, to the extent that you think both are attractively priced, and we'd actually
Wait for a
argue that
pullback,
US
might
energy
jump
at least
back
isn't
in.
overly attractive, MLPs maybe. But I do think that they're tied to different economic events, different outcomes for rates. So maybe you're
Ooh,
not
it
taking the same
going, I like
over
it.
and over again if you have both of those in the portfolio.
Got
But
it.
what I would be enthused about is some of the more defensive areas like consumer staples, like healthcare, not screamingly attractive, but a nice offset to some of these other exposures.
Healthcare seems to find a way to work in a lot of different environments.
That's right.
Worked last year, worked this year, but still always underappreciated when the tech stuff starts frothing up, as always.
That's right.
Martha, great to have the conversation with you again. Much appreciated.
Thanks for having me.
Absolutely. Martha Norton from Morningstar Wealth, the Chief Investment Officer at the Americas Division, with some thoughts here on the sectors. We'll continue that with a discussion about how to invest in an energy product that's pretty new to the marketplace. We'll be right back.
I still ripping here. A little early on closing there. It wants to get to the open. Still holding those 412 calls. Nice. Don, he's just, or Jan, he's just messing around. Looks like we have kind of an intraday cup here. Starting to form that larger handle. The gap fill up to 414. Big red candle there. About 30 minutes into power hour. Barbecue 9.79% green, 2646. A VWAP at 2540.
Say over the past year, I know we had a couple international energy scares, namely what was happening in England, and there was some wackiness in prices. But generally, because this is a fairly new product, we spend a lot of time talking about crude oil, natural gas, not so much about electricity itself. What have the prices been doing?
So for the past 2 years, you've had a really nice steady run up in electricity prices.
Playing
and
on
then
the
it kind
playing
of,
on the skis. You
almost
caught
went
all of us.
parabolic, we'll say, because
You got
had
the
a
whole
really
happy crew.
cold winter in the Northeast, or at least a
Oh,
start
dude,
to
you're on the
winter
East
in
Coast.
early
Those
December.
waves.
And forecasts also for a cold winter, but then you actually had
Oh,
what I think
that's
amounted
no
to like
Gulf
the
of
fourth
Mexico.
warmest winter in the past 50 years. And so prices,
Think.
specifically in the Northeast,
I
have
guess
kind of
sometimes.
retraced significantly. But the index
They're
itself
clean,
gives
Dink.
you
Why aren't you
exposure to the
surfing?
entire U.S. So the index didn't suffer near the drawdown
Nice
that you
lines.
saw in just that particular sector. So the overall trend over the past few years has been, steadily up, and we think that's going to continue.
What do you think will drive prices going forward? Is it
still climbing up here?
Is it cyclical in nature? How do you think about what drives energy prices on the short term versus the long term?
Sure. Well, we think about this in the short term. It's usually, the definite physical supply demand, like, weather, unit outages, transmission constraints, etc. But the index, the way we've designed it in the product, is that we don't carry exposure into the physical delivery. We just do this on the futures. And so what our view is, if you take a look, and Bloomberg put out some very relevant research recently, if you take a look, there's a prediction that from 2020 to 2050, fossil fuel usage in the U.S. is supposed to go down an average of about 8% per year. And electricity usage in the U.S. during that same time period is supposed to go up about 10% per year. So we see, like right now, electricity is the most consumed commodity in the U.S. on a retail notional basis. But again, it's not in any index, ETF, mutual fund. It's in nothing. So it's already the most relevant. And then we see this just becoming more relevant with what's going on with this electrification of America.
Got it. Tim, looking at how this fits into an investment strategy and a portfolio, is it in the same category as like an inflation hedge or part of the commodity basket, or is it an alternative more broadly?
We look at this probably as more like most pensions and endowments will have like 2 to 7% allocation to commodities. And so they typically express that view via one of the traditional commodity indexes. And those things are anywhere between 30 and 60% weight on carbon intensive energy features. And so right now, electricity is the most relevant, like we talked about, and it's going to get bigger and better. So if you don't have an allocation to that, you're probably missing something. So what you should be doing is looking at complementing or a supplement to what you have for your commodity exposure and adding this piece in there. As far as the inflation protection piece, CPI comes out monthly, and month after month after month, you're looking at like 2.5% electricity. Just that absolute component is right there every month.
Got it. Very cool stuff, and a good one for us to keep track of here. Nice addition to the commodity basket for us to follow. Thanks a lot for explaining, Tim.
Appreciate your time. Thank you.
Absolutely. Mr. Kramer is the CEO at CNIC Funds with the electricity ETF. All right, we're going to put it on our list here to keep track of. Tom's got some options trades when we come back. We're going to be looking at VFC, one of the big decliners in the retail world, not getting any help today, paling in comparison to what we saw.
I don't have no video plays, no. Suppose if I hold these futures after hours, that will be my exposure. If I'm long or short. Probably should close before and then reopen at 6 once the futures market opens back up. Which I'll probably go long for this kind of handover form here. And a gap fill before 14. I think the next 2 days. So might even gap up and come down, or gap up and go and then down. I don't know. We'll see. But you know, made the move all the way back down to 410. Bounced off 410 pretty heavy. As far as Nvidia specifically, I have no idea. Little inverted head and shoulders here with the retest of the 411 on the 1 minute. Futures are very simple. They're just like bears with leverage. More simple than options. See if we get a gap fill before close. We've got 30 minutes. Alright, there's eye of the day on SPY. Watch the gap fill we can get done today. Got 30 minutes. There it is. Now it's filling the gap. This is the way. Underestimate this SPY when it's down almost 1% after a 2 or 3 day sell-off. Reverse it by end of day. Balls at close. It got right up to my resistance line there. Maybe it won't fully fill a gap today. Oh, plenty of time. I think this was the retest right here, but I could be wrong. There might be a bigger retest coming. Holding that 9 moving average pretty nice. Might be setting up a head and shoulders on the 1 minute. Could set us up for a move back down to this breakout. Could be the handle. Stopped out right there. Made it basically to my line. I don't know if the rally's over yet though. Yeah, a little shoulder head. So let's see if we bounce on 411. The type of handle. When it chops around all day, just nothing, and then you get all this trading, just last little bit, all these moves start happening and building and forming and crazy.
To some degree. All right, chart still flirting with the lows, so this trader definitely needs it to bounce and bounce pretty soon, but they've got some time for it to play out.
Right.
Okay. How about Corning Glass, GLW? With Apple's big run up, this supplier hasn't really taken part.
Not at all. Basically flat, down just a little bit on the year. Positive news, that's why the stock's up today. They're increasing prices 20% on its display glass substrate. Now the global price increase will impact all regions, all compositions of their sizes, the different glasses that they use, the raw materials. Ongoing elevated costs in some of their raw materials has been offsetting some of their revenue generation and their margin expansion also here. So this has been a concern, but getting a nice little pop today, and I think somebody taking a position here where they expect this stock to kind of continue to move higher. But short term, as far as duration goes, trader bought 5,000 of the June 2nd weeklies. The 32 strike calls for an average debit of only 35 cents. You've only got 9 days in this position, so you're not paying a hefty option premium for this. So that break even of 32.35 over the next week and a half, that's only about 2.5% above the current share price in there. Call volume is about 5 times normal daily average volume that we've seen over the last 5 trading sessions. So somebody with the expectations that, hey, a price hike for Corning Glass to all their, customers.
Okay, come down here to test that breakout.
It's not just U.S. based; it's going to be international.
Head and shoulders
global,
playing out.
All of their products. Somebody thinking that this is going to
Vulcan candle on the 5 minutes, so might break through there a little bit.
That we're seeing today.
Okay. We'll be watching Corning to see if it tells us anything about the direction for
maybe inverse head and shoulders again, hitting the VWAP
for now, but it seems
for
like
1
those
minute.
two have disconnected Apple and Corning in a pretty big way. Still, it had a great start to the year, so it was in the mix.
But now you're starting to hear those rumblings that smartphone sales have started to come down a little bit. Apple got downgraded earlier this week. That never happens. And then also, electronic sales. They're in other, the customers or other electronics companies. And we're seeing a real steep drop off in a lot of those product sales.
All right, good stuff. Thanks for the trades, Tom. Bunch of bullish trades today, and maybe they'll pay off if the market can keep coming back. But it did hit a little bit of a wall there during our conversation. Nasdaq within about 1/3% of even for the session. Now, when we come back, let's get an update on the regional bank world. Jenny's got a very interesting story for us about.
Got a shoulder here, here's a head. Rival kept coming down. Dang, should have taken profits. That's stupid. Surely stupid. Okay, maybe this is the shoulder, and our head will be VWAP. The 10 minutes of Fugazi, though. A nice engulfing candle on the hourly there, last hour.
And channeling their vast pools of money in various investment pools. Now, with Blackstone involved now, I think this could be obviously seen as a positive here.
Barbecue
as
little
seen
pop there, 26.
Jamie Dimon and JP Morgan stepped in. But we'll have to wait and see, because right now this is just per an interview we saw with the CEO. But they've really continued to reassure investors that even as we see some discretionary spend shift, they are still backed with credit. They also have a pretty sizable exposure to several pockets of the real estate market, which close to half of the firm's earnings have exposure to. So I think that's important to note when looking at Blackstone's performance. This is a company that does rely heavily on the real estate market. So interesting story there. We are seeing regional banks lower today, Oliver, but I think this has been an ongoing narrative that we'll just have to keep updating.
Yeah, definitely. And a really important
51 likes for Jenny.
With all the concern about
You're
real
so
estate,
wise,
the
Jay
next
from
shoe
the
to
Bay.
drop, commercial real estate in particular, and the fact that Blackstone, often seen as the real leader in this group, willing to take on a little bit more exposure, could perhaps be encouraging. Thank you, Jenny, very much. Good update here. Blackstone, a little changed on the day. Regional banks lower, but nice to see that there are buyers for the assets, just like we saw also.
You're wise.
Last 48 hours, cleaning up the balance sheet.
Oh, fleshy flush there, Spy. Is our head forming?
Check in on the markets. He's the managing director at KK
Maybe.
Financial.
Your
Dan,
shoulder.
over the last half hour, we had actually kind of some
See if the
interesting
head's on
action.
the bounce will be
As they
up.
tried to make this push back towards even on the day, highest since the morning, highest really kind of since overnight, and then as soon as stocks started rallying, bonds started selling off. I don't know, it's kind of starting to look like 2022 a little bit. What do you think?
A little bit, Oliver. Yeah, you're seeing, some of the push-pull mechanisms within various asset classes continuing to play out as we move through this cycle of, climbing the wall
Could
of
just
worry,
force
I
it.
guess. And
or try and front run it and buy the head
you're
at
seeing those
VWAP.
dynamics continue to unfold.
However,
When you look at the
nothing's
dollar
confirmed at that
versus
point.
Bitcoin versus the bonds, and then the equity markets as well. And so it isn't overly surprising that if we do see the equity markets continue to move higher, that that we could see some repricing in some of the other asset classes, that the defensive mechanisms that kind of kicked in a little bit may be coming out a little bit. But overall, the general trends are basically being driven by a very stern message from the Fed that they are going
There's the
to continue
VWAP
to
touch.
maintain the course and potentially even walk rates higher by the second half of this year. And
His head and shoulders
really
played
the
out.
driver, I think, underneath all this, Oliver.
All right.
If we get an
I'm
inverse
bored
for the
with,
last 10.
Exactly the narrative that I put at the top of the show. So I appreciate that. We're on the same page. 10-year right now at 3.73. One thing I do get a lot is that even from folks who generally think that maybe the bond market could get a little dicey again, is that rates will be contained. What are your thoughts on that? I mean, should we start preparing maybe to see 10-year above 4% again?
Well, I think it's possible, but I think
Let's
the
see what
shock
happens
to the
here.
system is, I think we just find a range, I guess, Oliver. And now that we're testing the upper limits of the 2-month range, that I do still feel that it's going to be somewhat contained, because even though the Fed is continuing to be very strong in their message and offer the opportunity for potential hikes in the future, it's not a runaway situation where they're having to really dampen down inflation like they did last year. And there was so much uncertainty as to the 25 or 50 basis points, even kicking around 75 basis points at one time. I think that is, at least for the time being, out of the market. And so I do believe that if we do see rates continue to reset based on the Fed's message and some of the other dynamics in the market, that it will not be as dramatic as what we experienced, let's say, 6 months ago.
Okay. Is that possibly related to an economy that's softened up a little bit? That if we start pushing against inflation, maybe we're going to be a little quicker to deteriorate, perhaps?
Yeah, I think so. I think you're seeing the impact of the incremental change of rates, interest rate changes. And these things, I know we're in an instant gratification type of structure, and social media has shortened our attention span to a nanosecond. But these things take time, and I think the evolution, if you really step back and take a look at the overall
little shoulder
kind of
maybe being
dynamic
built
as far as how it's impacting the economy, that the Fed has to this point threaded the needle pretty well. But there's always the risk. And, so I think that the incremental increases have had an impact and will continue to have an impact. We are seeing the labor market softening.
10 minutes of Fugazi, too.
Inflation slowly moving lower, not to the speed that the Fed had hoped, but there are those shifting dynamics. And these things take time. And we don't certainly, I think anything that will show a significant shift, either lower in inflation
Probably
or
going to close these before
inflation, which is
NVIDIA earnings.
That would be a shock to the market. And the
Try and run them until after hours.
Okay. If the Fed chooses to push a little harder on inflation, do another hike, what's the trade? Long dollar, short bonds, short Bitcoin? What do you think, Dan?
Well, I think that has been the driver, Oliver. Obviously, I mean, I shouldn't say obviously, but I think that has been the driver from what I look at. And so I think you are seeing people trying to get ahead of that. So that, I think, has been the trade in the last month as the market's repricing the possibility of the Fed maintaining the course and even possibly incrementally increasing rates. So I think there's still more upside in that trade, but I think some market participants have already gotten ahead of that. So some of that's already been priced in. Look at the dollar trading at 2-month highs. 10-year trading yields at 2-month highs, so 2 years continuing to move up to 2-month highs. Bitcoin trading at 2-month lows. I mean, these are all
the shoulder holds.
And the inversion in the 210 is now starting to widen because of the uncertainty surrounding the short end of the curve, which is also being driven by the Fed.
All right, nice. Dan Dimming's Macro Corner. Good stuff.
All right, Oliver.
Have a good one, Dan. Appreciate Managing Director at KKM Financial. All right, we're going to have the conversation about the macro picture with our Schwab team when we come back. Colin Martin's on bonds. Randy Frederick's back on stocks as equities are down for the day, but up.
Oh, look at that flush. 10 minutes of Fugazi.
Like it could have gotten
VWAP.
uglier. Russell's still down about 1%, but the moves are fairly contained.
That's the wrong way.
Even as it yields pick up the pace to the upside over the last hour.
You're going the wrong way. Oh, that didn't work out. Careful with those 10 minutes. It was building a nice little shoulder there, and then zip, 10 minutes. Well, I guess I'm holding now. We'll see. Could still be the handle. I'd like to move up in the last 10 minutes too, so wait. Microsoft warns that China hackers attacked US infrastructure. Microsoft says investigation found China-based Volt Typhoon targets US critical infrastructure with living off the land techniques. What? Maybe that's what that sell-off was from. That was just a 10-minute move, I think. Coming up on the 5-minute frenzy. Barbecue 26.19 came down a little bit. It's up 8.67%. Rival. Yeah, this is why I closed it out. But I mean, it's still holding nice levels. Time frame at least. We'll see. Hourly, we've got a bearish MACD right under the 9. Might see a little bit more of a pullback tomorrow before it continues to rally. It's getting a pump. Highly unusual. Little bear flag on the 1 minute.
Fed. Seems like the market maybe disagrees with that a little bit, Randy. Dollar higher, yields up a little bit. What was your takeaway from the minutes?
I don't think the minutes really involved a whole lot of surprises. As Colin said, just about a week ago, the futures markets were pricing in a potential for a cut in the July meeting. Now that has been pushed out to September. You know, and this is the recession that cried wolf. It keeps saying it's coming, but it never does. We've had 3 consecutive quarters of positive GDP, and in fact, the Atlanta Fed estimate is expecting a higher GDP in the current quarter, which we're now halfway over, than what we got in Q1. So if it's just going to keep getting pushed out and get pushed out, and I think ultimately the futures markets are going to continue to adjust that rate cut until it eventually agrees with what the Fed's been telling us all along, which is that, hey, we're not cutting rates this year. And within the next couple of months, that'll be pushed out to sometime maybe December, January, and it'll be just about right. So while the markets appear to be pricing in rate cuts this year, and I've said this a number of times, I think if we could just go sideways for a while, as Colin just mentioned, that's enough to get this market on track, especially with some of the other more positive outlook. I mean, it's amazing to me how strong the forward forecasts of some of these corporations are, especially in technology, consumer discretionary, even in communication services, the cyclical names, than what you would have expected at this time.
Elaborate on that for me, Randy, and the cyclicality part.
Well, I mean, if you look at the leaders, last year, the leaders in the equity markets were all the defensive names. This year, it's been a complete flip the opposite direction. Right. There's really only one sector that's been a complete anomaly to that, and that's financials. Financials is down at the bottom, and there's obvious reasons for that because of the banking issues. But other than that, the majority of the top 5, 6 sectors are all cyclicals, the ones that were at the bottom of the list last year. And we oftentimes do see a flip over and a change over from leadership from, when the calendar changes. But this year it was pretty dramatic, and it literally happened on the first day of the year.
Yeah, it really did. Kind of convenient for our analysis. So we can line it up right there on the calendar year. So the idea then, I guess, is if rate hikes and inflation become the driver of markets again, we might reverse that year-to-date reversal potentially, and maybe it looks something more like a 22 if we get there. In the meantime, when it comes to portfolio allocation, we talked about this at the top of the show with Martha Norton from Morningstar, kind of how to think about the way bonds hedge stocks, and then maybe the need to also hedge bonds themselves from inflation. Colin, how do we do that?
Well, one thing that we're looking at a lot lately, Oliver, are TIPS, or Treasury Inflation Protected Securities. They're issued by the U.S. government, but they are indexed to the consumer price index. So as inflation rises or falls, mostly rising lately, the principal value of those TIPS rises as well. What we're really interested these days are the yields that they offer. If you look at TIPS pretty much across the whole TIPS yield curve, from short to intermediate to long-term maturities, we're seeing yields around 1.5%. And those are real yields, already inflation adjusted. So regardless of what inflation does over the holding period,
there's your bell. Got a little sell-off on barbecue just before.
And another way to look at it is whatever inflation is gets added onto that yield as a potential nominal total return. That's how we tend to think about our investments. So a lot of pushback when we talk to investors, we talk to our clients, is the level of yields today relative to inflation. So if we look at a 10-year
only have
Treasury
0.5%.
yield, just 3.7%.
See what NVIDIA brings. I think we'll probably go long on the futures
would expect inflation
after NVIDIA's earnings or bounce.
But for anyone out there who really is concerned about inflation,
gap up tomorrow potentially,
to stay elevated for the near term or even longer than that,
I'm getting fired again.
A great way to lock in positive real yields and protect or help protect your portfolios from the impact of rising prices.
Barbecue, well done today. Up 7.4% on the day. Still looking good. I mean, got flag after flag. Got a little extended this morning and then settled down and pulled the RSI off. We're still looking good. 4 hours at 70. It's a little hot. Daily's not even at 50 yet. So tomorrow's maybe the last day of a pump. Might be closing out some tomorrow for the weekend. I don't know. We'll just see how it goes. If it's just a week out of the gate, then I'll probably just try and sell early in the morning.
Over the past 2 years, the thing has climbed from $20 up to 86.
We have similar thing we had today and yesterday, where it just sells off and just a little bit and then starts to rally. Probably buy into that strength.
As we consider the big comeback in software as
Okay.
well. Got a busy half hour ahead.
Yeah, today was just more aggressive. It was hard to do that. But yeah, and then I'll be looking to sell at like 20, 30s. But we'll just see. Have to see if it rejects. It could rally into Friday. Doesn't have to sell off on Friday, but after a week like this, some profit taking. That it's a nice cup and handle breakout. What was it? Yeah, here. Yeah, last Friday it didn't sell off. It was basically flat. However, that was after a week of consolidating. Now we've had a week of rallying, so increased volume, increased volatility. Volatility on the downside also. They're doing. He is selling off here a bit. No, I'm not gonna have a video today. 130k into IEP. I mean, if they don't cut their divvy, that's a great play. Did their earnings come out? Price target raised? For the earnings. They got a price target raised without earnings yet? Oh, that was this morning. Thanks, DIY. I appreciate it, man.
So significantly missing when it comes to the bottom line here. From a revenue standpoint, it did actually beat. It came in at $623.6 million. Street was looking at $607.57 million here. So Oliver, this is just one of those things you want to be a little bit concerned about, especially their forward outlook. It looks like they are predicting here that they might see a little bit of contraction when it comes to their operating margin, or their operating margin at this point in time. They are projecting that it's going to be around 2% for this quarter. We actually saw it at around 5%. So you don't want to see that type of contraction. Now, they did add about 43 new customers that were customers that generated $1 million or more in product revenue. So I'm not sure where the street was sitting at for that, but I know that that was the same that they had for last quarter as well. So that seems to be a little bit consistent, but it does appear that they are adjusting their guidance to prepare for a little bit of a slowdown in this space. And unfortunately, I mean, this kind of gives you a little bit more insight into like mid cap and small cap names, and maybe seeing a little bit of a slowdown slowdown when it comes to the enterprise spending area of the business. We know cloud has been a hit or miss depending on the company, depending on the space that they actually really focus in on, and it does look like we're seeing a little bit of softening here. I'm not going to be surprised if we do see a little bit of a reaction when it comes to some of the other larger cloud names, even though they have very diversified businesses like Google.
Hey guys, I'm gonna take off. Thanks for the support today.
Or Snowflake, if you will.
You guys for all your likes. Where we at? 51 likes. Well done.
Like a companion.
Thanks Jay from Vague. Thanks DIY. Thanks Cameron. Thanks Experienced. Thank you Granite, Batman, Dink, Passing Cloud, John, Clint. Guys, thanks for the support. Thank you Ace. Gifted memberships. Legend.
Its trajectory over the last 4 years is
sub up, like up, comment down. Happy Money sticks around. Twitter is at Happy Money YT, and our Discord is the linked in chat. Not on there. Jump on there. If you did get a gifted membership, make sure and DM me on Discord, and I'll give you the Happy Crew roll.
On the year-long basis, it's been
pretty good day.
A good little example of how this market has come back to some of these growth companies. Revenue's fine.
Barbecue up pretty good.
Seems to be
for what happens tomorrow, I guess. And coming to the end of the week, if we consolidate, we rip and then dip. But yeah, it's looking like a nice breakout of a cup and handle. Oh, I think that gap fill's coming soon. Area B. Ronald, you're the pumper. When you're pumping, you actually want to know.
Also going to really weigh on shares, and the fact
looks
that
pretty
this
good.
is a stock that was up 20%
What is
this
this?
month heading into this report shows
Fair
that
market brand branded safes. Oh, safes.
analysts will be looking for the
Interesting.
upside case for
American
AI,
Rebel.
of course, on this earnings call. So
We haven't heard of it.
there could be some commentary about
Thanks, Tom.
that could help offset some of these losses.
Yeah, looks pretty nice.
That being said, there were reports that it was
Your momentum indicators are there. Bullish MACD, green over the 9. Above the 50 moving average now, which is nice.
What's looking to be pretty steep losses on this.
Almost have inverted head and shoulders, but not really.
All right. Appreciate the
To move off of the lows.
Always good, timely, and
Nice volume.
today with
Scattered around. Kind of a weirdly traded stock.
Elf, the big winner, Snowflake on the
Low float,
downside.
yeah.
Caroline Woods, Kevin Green.
3 million market cap, yeah, makes sense.
Splunk and Nvidia hopefully coming out soon as well. That's the big one this afternoon.
Trump had a save from them.
Pens
Wow.
and needles to hear what Jensen Wong has to say. But in the meantime,
That white rally today,
some
10%?
tech topics on our mind, including data storage and security at Splunk. A little bit of a wild aftermarket couple of prints there, but it does look like it's going to be a bit higher. We'll come back and check out those numbers while we wait
Financials,
for Nvidia.
not awful. This is probably a growing market too. Safes, given all the states that have been legalizing constitutional carry. Yeah, not bad. Not much revenue, but not much losses either. I don't know.
Offers a webcast that's right for you. Are you an active trader? Our
Market cap's really low, so yeah, looks pretty good.
To help you develop a deeper understanding of technical analysis.
Revenue's pretty low too, though.
Future
Video earnings come out, yeah.
Best of all, you can
Oh,
ask
all right. Anyways, thanks guys. We'll see you.